This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news.
We don't have any sound, producer Rohan. Producer Rohan, man. About to be downgraded to intern Rohan after this. Oh my goodness. Do we have sound now, guys? I think we do.
You gotta do the thing one more time to test it.
All right.
I'll restart. So I was saying I'm in a great mood
Holy
today.
moly, guys.
Not because of my trading, not because of any options trades I have, anything like that, but we have the Masters starting today. Tiger Woods just teed off about 20 minutes ago, so it's going to be a great weekend. Best golf tournament of the year. And then my St. Louis Cardinals kick off their season today at 4:15 p.m. Eastern, 3:15 p.m. Central Time.
So you're in a great mood.
Probably the last time Adam Wainwright and Yadier Molina will ever play an opening day game at Busch Stadium. I'd say.
Maybe.
So
you're in a great mood for sports. What about the market, though? Market is...
Well, the market's... but I'm also in a great mood because we have an in-person guest.
We do have an in-person guest, yes.
Yeah, John DeMaio... John DeMaio will join us in about 5 minutes. He's the CEO of Graphex Group, which is a graphene play. So we'll talk about how graphene's being used in EV batteries.
In studio.
The
rare in-studio.
In-studio guests, they are my favorite.
The last in-studio guest we had was Al Harrington.
That's true.
Right? Like a couple months ago. So anyway, big day for us. So we're going to have John here momentarily. We're going to do our second in our series on real estate investing with Cadre. David Vincent is going to join us at 1 o'clock today. Talk about why real estate should be in focus right now. Why real estate? Why now is the time to invest in real estate? What kind of secular headwinds and tailwinds are investors are facing right now as it pertains to that? So that'll be at 1 o'clock. Unfortunately, no Vivi today. We were supposed to have Vivi back on the show. She told me, no surprise, her flight was delayed.
Oh my God!
I know.
So we'll talk about that. We'll talk about flights.
We will definitely
talk
talk about
airline
flights.
Stocks. We also have to talk about Warren Buffett's new investment.
Yeah, there was a lot of confusion about that this morning.
And how Elon Musk may have broke some rules in his Twitter investment.
Elon Musk did some things.
Here's the thing: I think he at this point is just like poking the SEC and saying, "What are you gonna do?" Right? Like What are they gonna do? Slap him with a fine? He has what, $100 billion?
I don't know.
More $200 billion?
Something like that.
They can slap him with all the $1 million fines they want.
Yeah.
It doesn't matter.
Yeah. Okay, so we'll talk Elon, we'll talk Warren, we'll talk, what else was on my list here? If you want to talk about SoFi, we can talk about SoFi. Big mover of the day, though, is this momentous MNTS. We can talk about that as well. They got a deal with SpaceX. So that's the story. Morning glory. Everyone do us a solid. Smash that like button, please, and thank you. We'd appreciate that. And let's start with this. Aaron, why don't you introduce our first guest, and I will get out of the way, and you can tell us more about who we're about to talk to.
All right, so we got John DeMaio. He is joining us live in studio. Like I said, he's the CEO of the Graphex Group, ticker GRFXY. GRFXY. It's traded on the OTC markets right now, but who knows? Maybe someday. Who knows? But John, welcome to the show. Welcome to Benzinga Live.
Thanks, Aaron. Good to be here.
So just real quick to our audience, can you describe what the what the Graphex group is and what you guys are working on right now?
Sure, you bet. So we're a midstream producer of spherical graphite, which is used in EV batteries. So midstream takes it from the mining operation and delivers it to the battery manufacturers. And in that process, we take it, we shape it, we purify it, and then we do what we call pitch coating to give it the characteristics that make it usable and beneficial for batteries.
All right, got it. And do you mind just moving the mic a tiny bit closer?
Sure.
There we go. And so you're joining us here, downtown Detroit, Michigan, the automobile capital of the world.
Right.
What are you guys working on here in Michigan?
Right. So we announced just recently that we are going to build a pitch coating facility in Warren, Michigan. Right, the first of its kind probably in the United States, as far as we know. So we're real excited about that. All this talk about localizing supply chain, disarticulating it from Asian countries. So we're building that plant in Warren. Should be operational by middle of 2023.
Got it. So John, because we've seen a lot of interest in our audience in different EV plays, right? And a lot of people are talking about lithium. People are talking about graphite, graphene. Where does graphite play? Where does it fit in the kind of EV ecosystem?
Yeah. So most lithium-ion batteries for EVs are comprised of anywhere from 20 to 40% of graphite.
Wow.
So in your 400-pound Tesla Model S battery, there's about 150 pounds of graphite. All right, so it's kind of the unsung hero of the battery world. The marquee elements get a lot more play: lithium, nickel, cobalt, manganese. But graphite is the anode material for all of those different configurations. So regardless of what the cathode side is, right, nickel, lithium, cobalt, the anode side is graphite.
Got it. So everyone's kind of focused on lithium, but you're saying, hey, there's a lot of graphite in here too, and it's being it's a little underrated right now.
Well, underrated. The demand for graphite is up and to the right, almost exponentially, right, to mirror the EV proliferation. So, regardless of the configuration, like I said, graphite is the anode material for the foreseeable future. So, and with all the pressure on, the makers in the supply chain to localize, we're making what we think is the very first smartest move to locate the finished processing plant here in the U.S., hopefully the first of many.
So I'm curious, there's been a lot of talk in the investing world over the past few months about kind of risks with companies that have, exposure to China, Hong Kong. But in your case, why is having that partnership, actually beneficial to you guys?
Right. So first and foremost, we are a Cayman Island company.
Okay.
We're based in Hong Kong. But we do have a Chinese subsidiary. And the reason for that is that 80% or more of the graphite on the planet currently gets mined from China. So it makes perfect sense to locate your primary processing close to the source. Now, we are very active in conversations with other producers of the raw materials outside of China, right? So Mozambique, Brazil, Canada, to name a few. So we're in active discussions with mining operations that are either currently operational or coming online soon to, again, diversify that upstream supply chain and remove some of the supply chain logistic problems and some of that geopolitical concern, right? Now, with that said, the Chinese EV market is growing. So we are going to increase production in China as well to support that market. But we are going actively, and this is the first step, this plant in Warren is the first step in that expansion and diversification of the entire supply chain outside of China.
Awesome. Yeah, that's what I was curious about, because I imagine with something like this, with a mining company where a lot of your raw materials are coming from China, that's when it actually would be beneficial and make sense to kind of have that connection over there. So awesome. So I'm trying to think, what else do you think retail investors should know kind of about the EV? What's going on in EVs right now, the EV industry as a whole, that maybe you think most people aren't thinking about?
Well, I think the adoption rate in the U.S. is still fairly low, right? So, there's a cost factor, and then there's the range anxiety factor, they call it, right? So folks don't want the EV, they don't necessarily want to jump into an EV because they have concerns about, how robust is the charging network, et cetera. So there's still work to be done around that. So like with this announcement about the Defense Production Act, right? And to talk about, bringing mining operations here, that's great. But you got to do it in a way that supports the entire ecosystem, right? So it's great to have mining, but you have to have the production, like the stuff that we do, that midstream production, also be local, right? So the announcement about the DPA is great, But let's see how it implements, how it turns into implementation.
Yeah, and I think that's one thing that, especially around the world with everything going on in Ukraine and Russia right now, a lot of countries are thinking, how can we bring some of this production back home so we're not reliant on everything from overseas? So that Defensive Production Act could be great in that regard.
Yeah, well, and we think we're doing it intelligently, right? Because you can't just start mining operations in the U.S. Right? First of all, there's not that much graphite. It's there's some located in Alabama, right? So you have to disarticulate it in steps, and the first step would be the finishing process. We may bring the primary process over here once we find some more, call it local supply chain, perhaps up in Canada, maybe down in Brazil, but something that's not necessarily U.S. yet. And if the U.S. comes online with mining, we'll be right there.
Beautiful. All right, John. Well, thank you for hopping on the show. I know you guys, you got a busy day today. I don't know how much we're allowed to say, but maybe talking to some other people out here in Detroit.
Yep, it is the birthplace of the automotive industry.
There you go. Yeah, lots of potential opportunities up here. Yeah. John, thank you again for coming on the show. It was a pleasure having you.
It's a pleasure. Thanks. I'll see you again.
Yep. All right, guys. Always fun to get in studio guests again. That was John DeMaio, the CEO of Graphex Group, ticker GRFXY. Guys, go check it out. Graphite play.
Yo, what I miss, man?
Oh, what'd you miss? You missed a great interview.
I just knocked over everything.
Headphones?
Yeah, my bad.
We're all good.
My fault, guys.
All right, Spence. Let me just catch up on the chat real quick. See what stocks everyone's watching today. Oh shoot, I forgot the most important part. I forgot to ask the chat if they had any questions for John. Well, John's still here, so if anyone has any questions for John, throw them in the chat, and we'll play some telephone.
Throw them in the chat.
Spencer, what's been on the top of your watch list today?
Tesla? No, not Tesla. I mean, HPQ is the big one, right? It's the big story of the day. We should probably start there. Let's start with HPQ. So this is interesting. There was some intense debate this morning amongst the pre-market prep gang about what exactly was the nature of Warren Buffett's investment in Hewlett-Packard. Is this a new stake? Is it not a new stake? Because if it's a new stake, that matters more than if he already owned the stock and was simply buying more, right? Nobody really cares. I mean, adding to your position or reducing your position is worth less than
starting a
new position and selling entirely, right? That's worth way more. So the information this morning or last night that came out, I would forgive you if you were confused, because a lot of the reports out there were that it was a new position, right? Now, what does new mean to you, right? It was a new position in the eyes of the market if you define new as whether the market knew that Warren Buffett had invested in Hewlett-Packard. But the filings that hit the wires last night, the Form 4s, the information in those filings indicated that he had already bought the stock prior to yesterday, right? So it was a new position for Warren Buffett in the sense that he had bought the stock. He's bought in the stock this year, but it was not new in the sense that he bought the stock this week. That because the filings from last night showed a series of purchases on April 4th, April 5th, and April 6th, right? So Warren Buffett does have a new position. He has been buying Hewlett-Packard. We don't really know when. All we really know is at some point in the first 3 months of this year, well, I guess 3 months and change now, Warren Buffett began buying Hewlett-Packard. But he only reached the threshold requirement that requires him to disclose that position this week. Hence the disclosure.
So my only question, Spencer, is there anything happening at Hewlett-Packard that is exciting outside of this Warren Buffett investment?
I mean, I feel like in a lot, I don't know to answer your question, but I feel like in a lot of ways, this is a classic This
Warren
is
Buffett.
classic Warren
Yeah,
Buffett,
so I'm
right?
almost like
This is
surprised he wasn't already invested in Hewlett Packard.
This is like a pretty cheap company, pretty cheap stock. What's the PE on Hewlett Packard?
And there are two tickers for
low.
Hewlett Packard, correct?
Yeah, so that's also confusing. So since you brought that up,
Okay.
how is the other Hewlett Packard HPE? How's that doing today? It's up a quarter point. It's up 4 cents. No big deal. HPQ is the stock he bought. That's up 14%. Forward PE of 8, price to sales of 0.6, right? EV to EBITDA below 5. This is a cheap stock. It makes things, physical things. We know that Warren Buffett, he eschewed, I think I'm using that word right. He eschewed tech for a long time before finally, investing in Apple a few years ago. But he even in tech, he likes physical things. He doesn't like the metaverse, for example, right? And Hewlett Packard makes hardware. They make stuff, computers, right? Printers, all that good stuff. So in a lot of ways, this is a classic Warren Buffett stock. And the power of Buffett is worth 15% today. Stock's up $5. If you go to the daily chart here, as I'm about to do, it's not a very exciting stock. I'll tell you that. It really doesn't move a whole lot. Where's a daily? Here's a daily. Doesn't really move a whole lot. Let's zoom way out. Look at this HPQ chart. Let's go to a weekly. I mean, it's at all-time highs now. Oh no, it's not. No, what am I saying? This is like pre-spin-off though. I'm not quite sure about this price data because this is like before the company split up. So the split happened somewhere around here when they split into two different stocks. But slow and stodgy. I mean, in the last 3 years, the stock has gone from 25 to 40. That's not a very big move, right? Compared to a lot of tech out there. So, yeah, here we go. Oh, I didn't know that, Zen Bullish.
That Steve Jobs' first jobs were with
Bill Hewlett. I didn't know that.
Steve Jobs has a real interesting story.
Yeah. Wait, sorry, I'm catching up on the chat right now. He wants HP so he can print money. I get it. Very funny. Very clever. So anyway, there was confusion because I was like, wait a minute. Is this a new stake? And I went to his filing, his 13F filing on Edgar, and I didn't see Hewlett Packard in there. And I was like, wait, it is a new stake. But remember, the filing is as of the end of last year, right? His 13F that he filed in the middle of February is as of the end of 2021. So it was not in there. I was like, okay, so it's a new stake. But then the filing of the Form 4 from yesterday showed that, wait a minute, he already has shares. So it was confusing. It is a new stake. He didn't first buy Hewlett Packard this week. He first bought it at some point this year. But he's been buying. I mean, I think he owns like 120 million shares. That's a lot of Hewlett Packard.
Yeah, a lot of printers.
Yeah. Happy, I think my first computer too was a Hewlett Packard. I think everybody's was a Hewlett Packard. You guys remember Gateway? You remember Gateway?
What's that?
Gateway was like the big computer company, the big computer manufacturer. Whatever happened to Gateway? Anyone know? I had Gateway.
Maybe we did have one.
And then the first computer that I got that was like in my room was it was the brand was E-Machine. You guys, I don't know. Nobody remembers E-Machine.
John saying he does.
John remembers E-Machine. And my dad was like, no, don't worry. This is like the hot new brand. Everyone's gonna have E-Machines. Nobody had E-Machines.
I remember my mom had a Palm Pilot.
Yeah. I think my dad doesn't throw away hardware ever, so we definitely still have like 20-year-old printers and monitors and computers.
Or I bet you guys also have like a box full of just random cords.
Oh,
That go
for
to,
sure.
That
for
go
sure.
to things that you haven't seen in like years
Sure.
and years and years.
Star Child wanted a Gateway. So Gateway was like the sexy computer because it came in like that really cool like cow print box. Gateway was the cool brand, no doubt. I had a friend who had a Gateway. Was definitely jealous. Yeah. Okay. Yeah. HP bought them. I'd believe that. Yeah. Zen Bullish had an E-machine. Oh yeah. Now we're talking Compaq, Acer. Acer's still around. Wait, Aaron Bree, where'd you go? He left me here. Yeah, Gateway was the cow pattern. That was a good one. That was a really good one. Anyway, consolidation, right? That right there, what we just talked about with CompUSA, there was another one. The whole thing, like, since we're talking about old computer brands, right? That goes to show my point as to why I really am, generally speaking, not a big fan of picking individual stocks, right? Because if you flash back to like 2001 or whatever, and you ask people, hey, are computers here to stay? Are more people going to have computers in the future? The answer is obviously yes. Everybody's going to have a computer. But are you going to pick the manufacturer that's going to win? How do you know? How do I know? How do any of us know which manufacturer is going to win? I'd rather put my eggs in all the baskets than put it in one basket and hope I'm right. Betting on E-Machine wouldn't have worked out for you. Even though, I mean, computers are still here, still around, right? Betting on Compaq wouldn't have worked for you. Yes, obviously a fad. So yeah, I mean ETFs. I feel strongly about this. ETFs or even mutual funds, whatever. They're the way to go, right? Broad bets, broad secular bets. Like I'm bullish esports. I don't own any esports stocks. I own an esports fund. I'm bullish cannabis. I own 4 cannabis stocks, right? So this is a an argument
Spencer,
for diversification.
ETFs are so boring.
This is an argument for diversification right here because you could have bet on you could have made a bet on computers and been right about that, but been wrong, but picked the wrong company. That's the way it goes sometimes. Maybe you're right, MD. Maybe and who could have seen the whatever the Apple computer was that came out in like the early 2000s that like crushed everybody. Like
First Mac.
No, the one that had the transparent background. Yeah, that thing like just
The one that like every
that was
school, like their whole computer lab.
I just remember every computer lab in school had a Dell. Like they all had Dells, right? And then like the next year, they all had Macs, and I was like, "What the?" I didn't even know how to use a Mac. I had to learn how to use it. I didn't know that Mac was a thing.
I remember the first time
I didn't learn on a Mac. The iMac. Thank you, hot dog. The iMac. Yeah, that was a.
I remember the first time.
Killer.
So we always had like big computer labs growing up, and then when I got to high school, they introduced like laptop carts instead of computer labs. So they would bring in a cart of laptops to our class, and I remember we all had our school laptops like out on our desks one day, and our teacher just like stopped and was like, "Holy shit!" And we were like, "What?" And he was like, "I remember reading an article like 20 years ago saying at some point." You'll be in a classroom and every single student will have a computer on their desk. And he's like, I remember at the time reading that article thinking, what do you mean?
This is insane.
Yeah, like a computer's like thousands of dollars and they're huge. There's no way, kids will ever be able to have them on their desk. And then there we were. So you just never know. That's how technology advances. What is it, Moore's Law that says that it will... Well, I don't know. Moore's Law is something to do with like a semiconductor chip.
Yeah, Moore's Law says like the rate of innovation.
It will just be exponential. So it's really easy to say like, oh, what can Apple innovate? We already have iPhones and laptops, but check in 10 years and we'll be able to see what we have, and we'll probably not be what we expect right now. But
anyway, HPQ is still around, and the stock is doing pretty damn well. I mean, if you bought the thing in the summer of 2020. You bought the thing 2 years ago, right when COVID was hitting the fan. You've done all right for yourself. but it's also like a slow and stodgy. It's value tech. It's value tech. Classic Warren. As a reminder, 13F filing deadlines are 45 days from the end of the quarter. So the quarter obviously ended 7 days ago. May 15th or 14th. Wait, no, May 15th is a Sunday.
Isn't May 15th your birthday?
May 15th is a Sunday. So May 13th. Shoot. Is the deadline going to be Friday or Monday? Well, we'll find out. The middle of May.
Wait, Best of Detroit saying AB, what's the call today? TQQ worked wonder. I don't know if that's sarcastic or not because my TQQ calls did not. Well, see, here's the thing is they were up, but I couldn't sell them yesterday afternoon because I bought them in the same day and I have my pattern day trading restrictions on. So, but at one point they got in with me and then sold them. You made money, but unfortunately I didn't. I'll let you know if I have a call of the day. I'm watching SPY because I do think if we get down to this 443 level, or we're at 444.23 right now. If we get down to around 443, it looks like we could have a little bounce, and maybe not even if we get down there. If we just see some buying coming in, I wouldn't be surprised to see somewhat of a little SPY bounce, but who knows?
I mean, here we are. SPY is down 0.5% today. Qs are down as well. Everything is more or less down. Except for the
it feels like we've been saying that all week, though. Things can't go down forever, right? So we gotta see.
Let's just zoom out. That rally was vicious, right? That rally in the back half of March, vicious. But as far as the overall market today, I mean, it's the same story every day, right? Healthcare and staples. Wait, what's energy doing today? Energy's down.
It was up pre-market.
Let's go to the XLE. Energy's down today. The stocks are, at least. As USO. USO is down. All right, oil's down. But like the staples and health, guys, healthcare is just ripping every day. Look at this. Look at the healthcare ETF. Let's talk about this for a second.
What are the best? So what? I want to talk about what the best.
Is this an all-time high? It's damn near close. That's damn near close to an all-time high right there. All-time high was
bring up United Health's chart. The stock is just an absolute monster.
UNH report to earnings next week.
UNH, look at this chart.
Yeah, it's a freaking beast.
Cow.
Let's go to a weekly.
It's just going up.
Let's go to a monthly.
That's all it does. Look
Dude,
at that.
Parabolic.
I mean, I don't know. I don't even know. Oh, Gene. Yeah, I was thinking that. So there's a guy named Gene Kelly in the chat, and I was like, Gene Kelly, it sounds like a famous person, but I guess they're being. I guess it's a guy from Singing in the Rain, they're saying in the chat.
Okay.
So he's been made fun of his whole life for it. I'm sorry, Gene.
Wait, Gene Kelly says he's the manager of a trucking company. Gene, I would be very curious to get your take on what's happening right now.
Trucking prices are apparently going down right now.
Trucking.
Couple weeks. Trucking rates.
Shipping costs, right?
Costs,
like to use.
How much it costs to get your product on an 18-wheeler.
Well, okay, so as great as healthcare has been in the last couple of weeks, that's how awful transportation has been. Like, let's go JB Hunt. We talked about this yesterday, right? Let's go JB Hunt. Let's go let's go railways, right?
Look at FedEx. FedEx is down 13% in the past week.
FedEx, yeah. UPS, same story. Who else you got here? You got railways, right? CP.
But before we fully move on from healthcare, what are the other like really good stocks in the healthcare? Like what are the what is it, XLH? Or what's
XLV?
Oh, why I thought it was XLH?
Because H is for healthcare?
Yeah, but what
I don't know why.
What are the other biggest holdings? All right, so United Health, that's the biggest holding, 9.3%. J&J is the second biggest holding.
J&J can't stop going up.
J&J the second. Up, what's J&J's divvy? It's a nice little divvy play, right?
2.3% yield. That's not super exciting.
2.3 you said?
Yeah.
That's not
super exciting.
Not amazing.
Super exciting.
But then so United Health and Johnson & Johnson both make up together. They make up about 18% of the XLV.
And Bristol Myers in there as well. Right?
So those are the two biggest, around 9%. And then you have to go all the way down to 5.5% for AbbVie for your third biggest weighting, which I have been really liking AbbVie recently because that is a good dividend play.
Wait, how much is Bristol Meyer in the XLV? It's got to be up there.
3%. It's like its 10th biggest holding.
It's 10. Look at this BMY chart.
Bristol Myers. What does Bristol Myers produce? What is
Drug manufacturer.
I know. but,
Pharmaceutical.
which ones? They got some
I-
big, like
I don't know.
Tylenol or some shit.
I don't know. They got a lot of huge drugs. All these companies, right? Bristol Meyer, Johnson Johnson, AbbVie. They got
Well,
hundreds,
Johnson and Johnson,
hundreds
like,
and hundreds of
You
drugs.
walk into a Walgreens, like half the things in there are Johnson and Johnson
Yeah.
products.
Yeah.
Oh wow. Okay.
Yeah, this Bristol Meyer, it's almost back in the all-time high in Bristol Meyer looks like it was October of 99.
I think most of Bristol Myers products, it looks like, are like prescription drugs.
This Bristol Meyer stock is going to be at an all-time high in like a day or two, the rate it's going. Eli Lilly, another big pharma play, ripping parabolic. So you have like healthcare is winning,
You know what's so funny?
transportation is losing.
Is pull up a XLV
Okay.
versus XLB, or not XLB. What's the biotech one? XLI.
No, you can do like IBB or you can
IBB.
do
Like healthcare, great. Biotech, not so
let's go to
much.
a weekly. Yep.
What's going on with that chart there? Was there a split or something?
Yeah, there had to have been. That's bizarre. I don't know what that. Wait, 2018, 2017. What the heck was that? Wait, let's get rid of that and let's go XBI instead.
XBI. That's what I was thinking of.
All right. I don't know what happened there.
Something big in the back. Either way,
Anyway,
biotech.
here,
We're zooming in in the last like year or so, right? Go to like the beginning of 2021. Healthcare has been going up. Biotech has been going down. So
Right.
it's just showing that
Because there's no appetite for technology.
Well, it's just showing that investors are flowing to companies that are like currently actively making money.
Right. Developing drugs is expensive as all heck. And when you're in a rising rate environment and you need to borrow money and the rates to borrow money are going up and up and up, that's expensive. It is remarkable. It is absolutely remarkable. Let's just go to the start of last year. Let's go to early 2021. All right, XLV is up 25%, XBI is down 35%. Oh, investing is hard, everyone. Investing is hard. Wait, I want to know more about what's going on in transportation. Gene says the cost of hauling products is going up,
Yeah,
but customers don't want to pay more.
because I've been seeing as people pointing to that.
Well,
as,
what
like, a
choice
sign
do they
that
have?
Inflation might be coming down. Is that some of these shipping costs are dropping?
But I saw a thing today from Walmart. Walmart's going to pay their truckers $110,000 for their first year. Let's go to the what's the transport guys? IYT. Yeah, IYT. Look at this thing. IYT's top holdings are, I think FedEx is like number one or something like that. Let's go to the website and look real fast. It's railways. Oh, Uber. That's so interesting. Okay, so Uber and a couple airlines. Uber is a top holding of the IYT ETF. So let's bring Uber up here. Uber has nothing really to do with like the broader transportation theme, right? Uber is a different business entirely. I mean they have the freight. Whoops, sorry. They have the freight, so I guess it is exposed to some extent. But correct me if I'm wrong. Uber Freight's not the big part of their business yet.
I know nothing about, and I to be perfectly transparent, I'm not a fan of Uber. I use Uber, like I'm a customer of Uber, but
Yeah.
I'm not a fan of the stock. Like it's not a company that I want to invest in.
I could be convinced
To take a stab at Uber.
to take a stab at Uber. Not now, certainly not now. But I read that very bullish article in the Financial Times. I think it was on Monday.
It's down 6% today.
Yeah, I know. Well, because it's tech and it's transportation.
It is so
Right?
It's just they don't make money. They literally don't make money. I don't think they've ever turned like a profitable quarter.
No. I think. Oh, is that? Am I thinking of Lyft? No, I think they have. I think they have positive EBITDA, like for the first time. Here, let's go to the earnings.
They don't.
All right. They don't have positive EPS, but I believe they had positive EBITDA. It was like 3. I'm not going to look because it was like 3 quarters ago, I think. But I'm pretty sure they had positive EBITDA once or twice. And maybe I'm thinking of Lyft. I don't know. But anyway, I'm not going to buy Uber now. But like, if that Financial Times article was correct at all, and Uber really is working on developing the super app for everything.
I saw that.
I could be interested once that develops further. Not right now, but
I don't know.
I also don't believe in food delivery as like a business model. That's like a garbage business model. But if Uber is going to be way more than just food delivery, which I think it is right now. Anyway, it's ride sharing, it's freight.
Do you remember Uber Pool?
That's still around, isn't it?
No, I don't think so.
Uber Pool. What where you just like share rides with people, right?
Yeah. So I had a summer internship in LA, and I think it was only in like big cities, and I was in LA for a summer, and it was amazing because it would be like $6 for an Uber Pool, like 5 miles, and like they would sometimes pick someone else up on like your ride if you weren't in a rush, essentially.
Yeah.
But half the time you would like get into an Uber Pool, and they wouldn't even ever end up picking anyone else up anyway.
Oh,
and then I actually felt kind of bad because that just meant that the Ubers, like drivers, got paid less and all that.
Wait, speaking of supply chain and like transports quickly, how is this for timing? I just saw this new ETF launched. The ticker is SUPL. Supple. So the supply chain logistics ETF. It launched today. We don't have price data. It just opened today. Okay. Check out the holdings in Supple. All right. Timing of this, I guess it maybe is soon to tell, but initially speaking, the timing really couldn't have been that much worse, knowing that the sector has gotten killed in the last couple of days. All right. Top holdings in Supple are. Hold on. I'm on the website right now. It's railways, right? It's like CP, it's Union Pacific, it's UPS, CSX, FedEx, Old Dominion. Yeah, a lot of logistics plays, and they're all getting crushed in the last couple weeks. So maybe you buy it. Maybe this is the bottom. I don't know.
What is so? I saw that Directions opening a double leveraged tips ETF. TIPS.
Really? That's interesting.
But I don't
That's
understand.
cool.
I don't understand.
Whoa. Wait, are there tips ETFs out there already? Can someone check?
I don't know. Okay, here, I'll just pull up the tweet that I.
Wait, are there tips ETFs?
I don't know what
There are.
I don't know
okay.
what that means. I literally don't know what that means.
Tips are treasury. Wait, what? TIPS stands for
Treasury.
It's inflation protected securities, right? Yeah, Treasury inflation protected securities. That's what TIPS stands for. And they're bonds basically, right? But there are ETFs that you can buy. Yeah, there are a couple of TIPS ETFs out there. Okay, so there's a short-term TIPS ETF.
So I don't know. I just saw this on some people that I follow. I'm trying to share my screen, but my computer is being all wonky. Some people I follow on Twitter, and my computer stopped working.
That sucks.
Trying to zoom in. All right, Guy Labasse. I don't know. Eric Balchana. We've had him on the show before, right? He's from Bloomberg.
Yeah, I've had him on the show.
2 times TIPS ETF launching tomorrow. Suggested tagline: "Don't just hedge inflation, kick its ass." And then Guy said, "Friendly reminder: the TIP ETF is down about 8% year to date, despite high CPI inflation."
That's a real that I was going to mention that too.
TIPS don't do what retail investors
just
think
because
they
it's
should
in the name doesn't mean it necessarily has to do that, right? So the name, right? Treasury, inflation, and protected securities doesn't mean they have to go up in an inflationary environment, right? Just like hedge funds don't have to be a hedge against the overall market.
Yeah, and I wanted to because I know we brought it up on the show, and I hadn't looked into it. So
Why is my chair so much lower than yours?
You have to get all the way out of it and then hit this thing.
I keep look at this. I keep shrinking.
Well, I'll go down lower if you want.
No. It's ridiculous.
you go.
There we go.
There you go.
All right.
We talked about it on the show, but I didn't really know too much
went
about it, so I
higher.
didn't want to speak too much on it. But we talked about that ETF that you get exposure to like covered calls on the S&P 500.
Yeah, I remember that one.
Yeah, that one was cool. I want to look more into that and see kind of how we can employ that.
Okay. Now I'm too high.
All right, wait.
now-
Tiger just hit a drive. He likes
Dude, stop
it.
watching the Masters and doing the show.
It was just a quick highlight. Not
All right.
watching the Masters. Come on, that'd be so unprofessional.
Okay, let's talk about Twitter for a second, or let's talk about Elon Musk for a second.
Oh yeah.
This is kind of wonky, right?
Oh, I did officially get into some spy calls that expire tomorrow.
Oh, okay. Speaking of tomorrow, no Benzinga live tomorrow. No Benzinga live. We're doing also an abbreviated live trading, only for an hour. No moon or bust. No at the close. Tomorrow is the quarterly all hands Benzinga meeting. Once a quarter, we get the whole company together, all 130 of us, or however many people there are that work here. I don't even know anymore. And we go through all the things that worked, that didn't work last quarter, what we're going to try this quarter, the state of the business. It's the state of the union for Benzinga. And that is tomorrow, and it's going to go in pretty much all day. So after like 10 a.m., no more live shows for tomorrow.
Yeah.
So we'll be back on Monday with y'all. But today is our last show of the week. I do want to mention we are
Shelly's saying stream the meeting.
Yeah.
That could be.
We've talked about that in the past. I would vote to stream the meeting, but I think not everyone here shares that belief. I think Jason. I think if we asked him again,
We did one time.
We did ask him
We
again.
shared. We shared.
I think Jason would do it.
We shared the awards one, but what if I just went rogue and started like live streaming my reactions to the meeting?
I think Jason honestly would do it, but I think maybe like some other people here or like the Behringer people wouldn't necessarily want that. I don't know honestly. I'm not going to close the door on that. I mean, maybe not for tomorrow, but I'm going to say at some point in the future, it's possible that we do stream this meeting. Because I think it's cool. No one does that, right? No one who streams their all hands company meetings.
I agree.
But of course, if we were to stream it, we would have to make sure that like the production is good, is of a certain quality, and well, we can figure it out. But anyway, so that's the deal for tomorrow. So for today, we're doing trivia. Don't worry, we do have a trivia segment prepared. For say 1:30. How's that? 1:30 we're doing trivia. The theme of the day is I think the theme is like just business, general business trivia. I could have made a golf trivia for you, Aaron, but I didn't.
Yeah, I'm not even that good at golf trivia because there's so much like old stuff that I don't know. My golf knowledge really starts when like Tiger Woods started playing, and even then, if you ask me stuff about like golf from the early 2000s, I won't know. Shake Shack stock has gotten so hammered. Has it gotten hammered more than other like restaurant
I don't know. Let's look outside.
chain stocks? Okay.
I do not see a line.
Well, so here's what I want to know.
Actually, I do. I don't know. It's hard to tell from here. Is there a line? Shake Shack?
Probably. But so last Friday, I was on Shake Shack's app, and on the app they have a Shack Cam. Shack Cam. And it says Madison Square Park. It says, check out what's happening at the OG Shack in Madison Square Park. I was like, oh, that's pretty cool. Like a live camera of New York City from the original Shack. But
it'd be funnier if it was just a stream of like Shaq's face.
Oh, like Shaq. Yeah, like Shaquille O'Neal. Shack Cam. Yeah,
Wait,
that's
so finish the story. Sorry.
So it sounded cool, and I wanted to watch. And I'm showing you on the phone right now where you can get to it on the Shake Shack app.
Okay.
And I kind of, as a joke, took a screenshot and tweeted and said, I took a screenshot and I tweeted, I go, @Shake Shack, please help me. The Shack Cam is not working. Code red, code red.
Okay.
And Shake Shack responded.
Oh gosh.
And they said, unfortunately, we have decided to discontinue the use of the Shack Cam when we updated our website several months back. We are sorry for any inconvenience this will cause you. A good alternative to see what's going on is the WeatherBug site. So no Shack Cam. I might be bearish on Shake
Didn't know
Shack.
there was a Shack Cam.
I didn't know. I didn't either. I found out about it when it was already defunct, and that made me even more mad that I never got to experience a Shack Cam in its glory. But
No, but in all seriousness, there should be cameras in restaurants that let you see if there's a line. How am I supposed to know if it's crowded or not?
yeah,
What am I supposed to pick up the phone and call them? That's who does that?
I mean,
Like Chipotle. Get a camera in every Chipotle. Let me be able to go on the internet and look and see if it's crowded, and if it's not, I will go there.
So can you do me a favor and pull up Benzinga Pro and pull up Shaq's chart? Because I want to just look at the stock, how the stock's performed compared to other like fast casual restaurants, right? Your Chipotle,
gotten killed.
Your
Right here.
what are some other?
CMG, we'll go DPZ, we'll go McDonald's, we'll go what's QSR, what are some other fast casual fast foodie type
Darden,
restaurants?
I would maybe.
Now here, let's go to the Peers tab. When in doubt, go to the Peers tab. Here we go. We'll do Starbucks. We'll do Yum Brands. We'll do Wingstop. Let's look at Wingstop. All right, back to the chart. Okay, Wing, and we'll do SBUX. Here we go. And this is going back. Let's just go back to the start of last year because I said so. All right. Shaq is the biggest loser.
Really? Oh,
I'd-
Wendy's. Kylie's got a good one. Wendy's.
All right, fine. I can have Wendy's. There's a
I
Wen-
wouldn't
there's
really.
a
I mean,
Wendy's
Wendy's
near me
and
I've
Shake
never been
Shack,
to.
they're obviously like burger. I don't know. They're very similar, but Shake Shack's obviously like a step above, more expensive.
There was a Shake Shack in our hotel in Vegas.
Oh, really? In the hotel?
Serious Vegasflation. Hardcore Vegasflation. Shake Shack is already expensive. More expensive in Vegas. Everything is more expensive in Vegas. Anyway, McDonald's is your big winner here. I said this yesterday. I want no part of any restaurant right now. They're fighting a two-front war.
But
A
have you heard the
two-front
argument that
inflation
Have you heard the
war.
argument that McDonald's is really a real estate company?
Yes, because they own all their real estate.
So what if could I talk you into a McDonald's investment?
Probably not.
Probably not.
No, probably not.
Okay.
Um,
I wasn't gonna try too hard anyway because I do think McDonald's has a lot.
wait, but be honest. You're only bullish McDonald's because of the
spicy chicken nuggets.
spicy chicken nuggets.
That's part of it. I also we talk about this a lot, right? I like to look at companies that I'm a customer of. I go to McDonald's more than I should, and there are always lines. And I used to think like, oh, I don't want to invest in McDonald's because people are trying to eat healthier and healthier. Eventually, McDonald's. Like, I just don't think that's a thing. Like, I think McDonald's will always have enough customers.
Perhaps. Perhaps.
That's what used to worry me, and now even because honestly, like I have been, hot dog Jones is saying hostess.
Well, yeah. Right now we're talking restaurants.
Yeah,
Yeah.
I even recently I've been like trying to like I stopped drinking as much soda. I've been trying to eat like somewhat a little bit healthier, going to the gym more, and I'll still like go to McDonald's. It's like, oh, I'm just going to McDonald's like once a week. Like if you eat, I don't know.
I want no part of any restaurant right now. Honestly, the inflation thing is, I mean, it's already a low margin business, and now they're having to pay more money for their food, right? And you can only charge so much for a freaking Big Mac, right? And they're paying their employees more, which is a good thing. I'm not against that, but like, it just means costs are going up. So
Yeah,
I want no part of any of these.
That's why I'm not in McDonald's as like a trader. I don't own the stock right now, as I am worried about the different because I went the other night and it was like, oh, it's a great question, Kylie. Is there a fast food ETF?
Yeah, they're no, I don't know about fast food specifically, Kylie. There are certainly a number of restaurant ETFs that we can find. Is this for me?
Yeah, if you want to use the computer charger.
Yeah, Aaron and I have to share a charger here because we're po. Okay, so restaurant ETFs, ready? There's a couple of them. Before I give you the ticker, let me look at the holdings, make sure.
Yeah,
it's
Christian, I've
relevant.
noticed that too. There are a lot of at like different fast food restaurants I go to have made like Buffalo Wild Wings. I saw there's one right by my place. It's like $500 signing bonus when you go to Buffalo Wild Wings. So I do think McDonald's and a lot of these other Chipotle. Like I went to McDonald's the other night at like 9 p.m. and it was closed, and they were supposed to be open until like 11. They were just closed because they didn't have the staff or they didn't have the the food they needed. The Chipotle by my house is so.
Chipotle has problems.
Yeah, like the Chipotle by my place is out of everything
Yeah.
all the time. And I went there the other day and I was like, all right, I guess I'll like get a bowl of whatever you have. Like they had like chicken and rice, but they didn't have any of the fajita vegetables I liked. They didn't have any of the sauces I liked. It was just terrible. It was not a good tasting bowl. But I still like Chipotle.
I don't actually. Yeah, I know there was like food ETFs like PB&J is like a food ETF, right? But that's more like food companies. That's not like restaurants. Like PB&J is like your Coke and Pepsi, right? Of the world. I don't actually know if there's a restaurant ETF. Whoa, dude, what are you watching over there? Yeah, good question. I'm gonna look. This is gonna bug me right now. I'm gonna look. I'm just gonna go to Google. Are there any restaurant ETFs? Oh, EATZ. There's one. EATZ. Eats. Yeah, advisor shares. What's in EATZ? Don't care about that. Don't care about
PB&J.
Well, that's more like food. That's like food though.
Yeah, I just googled food ETFs.
Yeah, no, that's not what we're talking about. So EATZ top holdings are. As soon as the page loads, I'll be able to tell you.
Ooh, Marco said he's looking at Clorox. This is one that I made a lot of money trading the downside off its last earnings reports. But what trade are you looking at Clorox? I can get talked into
all right,
a nice swing trade on Clorox. Again, I've been watching my biggest stocks on my watch list right now are 3M. 3M, I'm second guessing it, Spencer, because I think staples are up today and 3M is down. And I don't like that. Anytime I have a stock that is down while the industry is up is a bad sign to me.
Wait, can I tell you what the top holdings are in Eats before we move on?
Of course.
All right, the largest holding in Eats is Dave & Buster's, which is Play. All right, then you have Arcos Dorados, ARCO, Barbecue Holdings, BBQ. Then you have RCI Hospitality Holdings, which is Rick is the ticker. Dutch Brothers is in there. Sweet Green, Papa John's, Domino's. These are all your top holdings in the EATZ. Wendy's is in there. Darden Restaurants, Chipotle, McDonald's, Denny's, Shake Shack, Cheesecake Factory. So
wait, you know what Rick is?
Got them all. Do I know what Rick is?
Yeah.
No.
RCI Hospitality.
Should I know what that is?
RCI Hospitality Holdings, Inc. owns and operates upscale gentlemen's clubs and restaurants.
Really?
The firm has clubs in New York City, Chicago, Dallas, Fort Worth, Houston, Miami, Minneapolis, Denver, St. Louis, Charlotte, Pittsburgh. Well, I got to see which.
But do they have a dividend?
I got to see.
They do.
I got to see which restaurant they own in St. Louis. See if I've been there.
Oh man.
Oh yes, Scarlett's.
Oh yes. Aaron is familiar. Aaron is familiar
I've been there, but I've heard
with
about
all
it.
of the fine establishments over there. Maybe we should get them on the show.
RCI?
Yeah.
I'm down. It's
Why
all
not?
done. RCI Hospitality.
RCI Hospitality Group. I bet you it's an inflation hedge. Actually, I don't know if that's true.
Like a recession.
I don't know. Wait, can we talk about Twitter and Elon Musk for a second here? But no, you wanted to go on your Staples thing. So okay, my Altria is down today.
Wait, Easy Mike, you worked where in a previous life? Scores?
Scores. Hey.
What Scores?
It's a chain, national chain. Is that an accurate statement? It's I think a national chain of gentlemen's clubs.
Oh,
There's a very infamous one in New York. They made the movie Hustlers about that.
oh. St. Louis Pizza Emos. Yes. Shout out Emos. Spencer,
That's
I'm
good.
gonna
That's
order,
funny,
I'm
Tiny.
I'm gonna order us some emos.
Yo, that's
so we
hilarious.
can try it.
Oh man, Hooters is not public. Neither is Subway. I know it's off topic now, but Subway has never been a public company, which is interesting.
At one point, Subway had like more locations
yeah,
than
they overexpanded. They
McDonald's.
overexpanded.
Remember when Starbucks overexpanded too, and they just shut down a bunch of
yeah.
shops? I think that was in like the 08.
Yeah.
Guys, go ahead and give us a follow on Twitter. Mine's Aaron Bree 5. Spencer's is SJ Israel.
That we should. All right, let's get our guy on the show. Ask them if they're able to pay out their dividend in singles.
Oh yeah, 30 and I are doing a head-to-head DraftKings matchup for the Masters. Good luck, man. $20 on the line. You're going down. Yeah, Celestial Light. I don't know how you say that. Are you from St. Louis? I am. I miss my emos. My roommate's my roommate's mom actually shipped us some emos. Will ship you pizzas that are like half cooked on like dry ice. Then you just put them in the oven, and it's amazing. And then best of Detroit. So someone in the chat, let me find him, Mr. Berry Bear, call him Yogi. He's such a bear. I gotta find it.
Okay.
I think his name was Adrian.
Ron, Jared's in jail, man. Or Jared's in prison.
What became of Jared?
Jared's in prison.
Yeah. We don't need to talk about that.
Yeah.
I'm from West County, like Creve Coeur area in St. Louis. How about y'all? McClure North. Nice.
Hey.
I used to play McClure in sports in high school. Oh, yeah. Adrian, SPY about to shoot down. So I'm actually looking at SPY, but I'm looking for a bounce. I played SPY puts earlier this week and made some money on them. I'm not really looking to go short again. I'm just kind of patiently waiting. Who was it? Best of Detroit was asking. And honestly, I don't really have a defined level in SPY where I have a few levels. I mentioned that 443 level. I think around 444 flat as well, we could get a bounce, but I'm more just looking for momentum. If I see, a 5-10 minute candle where buyers are coming into SPY and it looks like, oh, this could be one of those afternoons that we see a rally, I wouldn't mind getting into some cheap SPY calls that expire tomorrow, because it's just And who knows? Maybe you look at the chart and think SPY is going to go down, so you want to play some cheap SPY puts that expire tomorrow. But I always think it's a good opportunity when you get into the afternoons, the day before an expiry, that you can buy some kind of cheap options.
I just noticed that Bed Bath & Beyond has gotten absolutely schlossed today.
Parkway Central? No way.
GameStop is too. They're all down. Everything's down today. Holy cow!
We've got so many. Can all the St. Louis people in the chat follow me?
Yo,
on
please
Twitter
stand
so we
up.
can connect?
All the St. Louis people, please stand up. So Aaron,
from the 314.
Even you in the back, stand up so Aaron can see you.
Yeah, we got Cardinals playing today at 3:15. Wainwright to Molina. Parkway Central is like right next to the school I went to.
Is anybody here from New Jersey besides me? Out of curiosity.
Probably.
It's funny that Aaron and I are from. Missouri, New Jersey, and here we are in Detroit.
Crazy.
Life is crazy like that, man.
Small world.
Life is crazy.
But yeah, like this person that went to Parkway Central, depending on the year they graduate, like I'm sure I know people that they know. Like small world. Small world, man. Jersey girl.
Wait,
here.
what industries or companies are like? Everyone knows Anheuser-Busch.
Anheuser-Busch.
Is that it?
No, like what is?
But
it?
like what? Like are there like because like where I'm from, like every healthcare company, like Johnson & Johnson, Pfizer, Eli Lilly, Bristol Meyer Squibb, like they're all in New Jersey. They're all like right there.
Healthcare is big in St. Louis too. Centene is headquartered in St. Louis.
Nice.
Enterprise, car rental company from St. Louis.
Public company.
Peabody Energy, BTU.
Okay.
You might know the stock.
Nice.
Central Jersey. I'm trying to think. Let me just Google St. Louis Fortune 500.
Yeah, it's like every major healthcare pharmaceutical companies. Like,
well, St. Louis has a very strong like hospital. So Edwards Jones is in.
I knew that. I knew Edward Jones.
In St. Louis, yeah, because the Rams used to play at the Edward Jones Dome. But yeah, I mean Anheuser-Busch really the biggest.
RG says credit card payment centers
in St. Louis. We do
yeah.
have a MasterCard. Yeah, out in like Chesterfield.
Yeah.
Which is kind of like not industrial, but like a corporate part of St. like 25 minutes west of downtown St. Louis. There are all these corporate buildings, and I think MasterCard, Visa. Oh yeah, Jack Dorsey's from St. Louis, and so is Jack Dorsey, and so is Jim McKelvey, who is the Square CEO and founder.
Oh,
Dorsey is the Twitter CEO and founder, not CEO anymore, Twitter founder.
right. Wait, Jack Dorsey also founded Square, did he not?
No, Jim McKelvey did, but with Jack Dorsey's like on the board.
Yeah, he's a CEO
Jack Dorsey's the CEO
of Block, isn't he?
Block. Okay.
Could have sworn he was a CEO.
Let me see what this Jim McKelvey guy's done.
All right, while you do that,
He's the co-founder of Block.
all right, fine.
Maybe they founded it together. I don't know.
Speaking of Twitter, can we just talk about this for a second? So Elon Musk, like, this is kind of weird how this happened. So we all remember a couple days ago, right, where Elon Musk files a 13G, a passive stake. He's taken a 9.1% stake in Twitter. So there's another filing out yesterday that was a 13D, which means it's an active stake. So the difference between a 13G and a 13D is just like whether you intend to like make noise and call for change, right? 13D is the active stake. That's what he filed yesterday with a slightly smaller share count than the filing on Monday. So people are like, wait. Elon Musk. Did you buy Twitter and then disclose it on Monday and then sell it 2 days later? And he tweeted about this. He said, no sale took place. The initial share number filed was incorrect. Okay. So that's mistake number one. Mistake number two, as highlighted by the Washington Post today, is Elon Musk was actually late in filing his 13G, right? He should have filed it when he crossed the 5% threshold, right? But he didn't. He waited until he was done buying to do the SEC filing. And that probably saves him some money. Because if you think about it like this, Elon Musk, the news of him buying Twitter is worth a certain premium. And it would behoove Elon to do all his buying before the filing hits so that he doesn't have to buy it at elevated prices, right? So essentially what happened is he bought all of his shares. It looks like, well, he was buying from the end of January through early April, right? And it looks like he actually crossed the 5% threshold in the middle of March. So he should have filed like 2 weeks ago, right? That he had to stake in Twitter, but he didn't. He waited till Monday. Was it Monday? Yeah, Monday. So are they going to do anything about it? I don't know. Is there any recourse? Probably not. Is this super minutia into the weeds? A little bit. Do I like rhetorical questions? I do.
Yeah, and so my thing here is it's like, all right, this is classic Elon, right? That he's kind of it's not something that's like so nefarious, so bad that it's like lock him up, throw him in jail. But it's like, all right, dude, like why do you think you can just like do things blatantly not by the rules? And it's because like at the end of the day, what is the SEC going to do? Slap $1 million fine on him? We talked about it. He's got billions and billions of dollars. It just means absolutely nothing.
Yeah.
Honestly, Elon probably gets more satisfaction out of knowing, I can bend the rules and I can do things that other people can't do than it bothers him that he has to pay the SEC a few $1 million. Sam A in the chat saying that Jack Dorsey has recently said that he regrets founding Twitter. I did not see that, but I'll have to look into that. I could see like maybe like the social the social impact of like social media. Maybe he's like he feels like dirty and being a big proponent of it. But I think at the end of the day, like you could say to him, look, Jack, whether you made Twitter or not, like there was going to be other social media platforms besides Facebook, and someone was going to make them. So like, you know, it's not like Dorsey started social media.
No, I think he also was saying that he regrets the centralization of the internet, right? How essentially a handful of companies have taken control of the internet, right? Amazon, Apple, to some extent, Google, right?
Facebook, Twitter,
Microsoft to some extent, right? I
yeah,
mean,
and that's why I think right now it's like it's so interesting because it's not like it's
the internet's not decentralized.
well, it's not like it's people on all parts of like the political spectrum are saying that's a problem, that some of these big tech companies have too much power, and like the question is like, you know, what to do about it. And I saw one of Twitter's existing board members recently said that basically Elon joining the board means nothing to Twitter. I don't know.
That was from Ron Barron, right?
Yeah, and he's on the board.
Yeah.
And so,
Dude, how pissed do you think they are?
the other board members of Twitter.
Yes.
Well,
they're probably
well,
furious
I don't
right
know,
now.
like how I don't know how like pissed they are about
Because
Elon.
now they got to deal with the Hurricane Elon.
They got to deal with Elon, but I also think like in part of what he was saying is that like this is complicated, right? When you're
Yeah.
going into, are you a publisher or are you a forum? Are you a, you know, how do you legally classify yourselves as an app? How do you use like Section 230 to shield something? Like all
Yeah.
these things are like very complicated that the board has had to deal with not just at Twitter but other social media companies, Facebook, Google, you name it. And so he's basically saying Elon coming in thinking like he can change all these things and do whatever he wants. He's basically saying like, look, we've like thought about these things, these problems that like, you know, but then you have this and that and this. So who knows? Maybe Elon will come in and realize, oh, some of the things that he wants to see happen. Sam's saying Ron said that because he has a major investment in Tesla and doesn't want it distracted by Elon's. I don't know if that was all that I read. It sounded like basically some of these problems Elon's bringing forth, the board has already addressed and basically just found that what they're doing now is the best practice for them. So we'll see.
I'd also be concerned if I was uber bullish Tesla, if I owned a lot of Tesla stock, I would be concerned too. You have serious, and I said this before, but like there is serious risk here, right, for Tesla.
See, I'm
Like the
almost,
Elon premium is freaking huge.
and I've said this before though, I almost would be more bullish Tesla with a different CEO.
Dude, that's a lie that people will tell themselves to help them sleep at night.
I mean, that's not
Okay.
a lie to me. Like I really think like Tesla is at this point not too big to fail, but it's like damn near. And with the right person, that's like Elon is so
Maybe.
Elon is so
He's so Elon.
he's just so Elon, but he's so like driven by
Yeah.
ideas in the big picture and stuff. Like if someone came in and was running Tesla, like really
Okay.
a little more focused
Okay,
on
yeah,
like the
okay.
logistics.
Yeah, maybe that's true. Maybe what Zen Bullish said is true. Maybe what you're saying is true.
Okay.
Okay, you may be right, but that doesn't take away from the fact that Elon, the cult of Elon, is overpowering. It is overpowering. If Elon left, if he stepped down as CEO of Tesla, how far down does Tesla trade that day?
Well, that's even again
I'm gonna say
20%.
I was gonna say 25%. I'm gonna say Tesla trades
I'd buy
down
that dip.
25%.
I'd buy that dip.
You buy the dip?
I'd buy that dip.
Okay.
Someone's asking if David Green's on today. Should we ask David? Because I know we originally asked him tomorrow.
Yeah,
and he's-
you want to shoot him a text?
I'll shoot him a text.
David has been
it's already almost
feeling.
one.
He's been feeling under the weather, but I love to.
Whatever. It's alright because David really does primarily most of his trade-ins in the morning. So already
Yeah.
when he joins us at 11:30, he's kind of winding down. So by this point, he's probably not really doing many active trades. But
That's
we will
true.
get David back on next week, hopefully.
I
assuming he's feeling better.
certainly hope so. Okay, we talked about Elon. We talked about.
It is frustrating, like to see. I just hate when like uber rich people think they can do whatever they want and like not play by rules. And
Yeah.
I don't play by the rules all the time. Like I'm not saying everyone's got to play by the rules, but it rubs me the wrong way when you got a guy.
It really grinds your gears.
It grinds
It
my
really
gears
grinds your
when
gears.
some pompous asshole like Elon
Yeah.
comes in and thinks he can do whatever he wants. And the SEC, our own regulatory agencies in the wealthiest country on earth in history, can't do anything about it because he's just got so much money.
I mean, they can fine him a few pennies. Right?
Exactly. Like
Right,
that's
but,
it. Like exactly. And it's just because he can. Like who knows? Maybe if I had that much money, and I'd like to think that I wouldn't do that. I'd like to think that I'd at least try to play by the rules. Yeah, that's what I'm saying. Like the SEC is a joke. They don't want to actually.
Who is who's better at what they do? The SEC or the IRS? Is that should that be today's Twitter poll or YouTube poll?
Yeah, I like that. I'm actually in favor.
Who are you more afraid of, the SEC or the IRS? That's a good question. Who are you more afraid of?
Well, if you're afraid of the IRS, or if you're afraid of the SEC,
That's the question. Who are you more afraid of? Chat's saying IRS.
Does a better job or does a worse job?
No, I forget the original question. The new question is who are you more afraid of?
I'm more.
Clark says the
I'm,
SEC.
Okay, I'm more afraid of the IRS, but not.
They're all saying the IRS because the SEC is a civil. It's a civil organization, right? SEC can't send you to prison. They can only fine you, and then send it to the DOJ, who can prosecute. But the SEC can't prosecute you. The IRS, they can prosecute you. So I'm probably more afraid of the IRS.
Here's why I am more scared of the IRS, and it's not because I am like actively committing tax fraud.
This should be good.
And this is just a bigger problem to me, you know, but either way, the tax code is very complicated. And basically what happens here in the US.
Just admit you screwed up.
No. Because I don't know if I did or not. That's what I'm getting to. The tax code here in the US is very complicated. And basically what happens is they send you the tax code, all these papers, and you got to put in all these numbers and stuff, and it's very complicated. And some people go to school for years and years and years and get an accounting degree to understand this tax code.
Yeah.
And the government basically says, hey, figure out how much you owe us. And if you're wrong, by the way, you could go to jail. So I'm just saying, like, I'm more scared of the IRS than the SEC because I know I haven't done any insider training,
securities
fraud.
Yeah, but you don't know about
I don't know if I've maybe
Yeah.
screwed something up with my taxes. Like maybe I have a 1099 out there at some brokerage account that I didn't report that I should have. I don't know.
Yeah, I think we all. I've thought about that. Do I have like any stray accounts that I've just like forgotten about?
Is like I'd be such a small fish for the IRS to fry that like
Yeah.
couldn't I just play dumb and be like, guys, look, this shit's pretty complicated. Like just tell me how much I really owe you and I'll give it to you.
But I'm just stupid on me.
I'm just stupid on me. I just use TurboTax. I just put my W-4 into my phone and click submit. How am I supposed to know? And hopefully I'd get like a one free out of jail card, and the IRS would be like,
Let this be your reminder about tax day, everybody. April 15th is around the corner. Next Friday.
Okay, so I did my taxes with TurboTax, and I
TurboTax.
I did it by the book.
It's turbo time.
So I said I was, worked in Missouri for like half the year. And then when I moved up here, I worked in Michigan for half the year. So, and I had to pay Michigan taxes, but I got a refund in Missouri. So really I would have been better off just filing like as if I had just like lived in Missouri the whole year.
Wait, that's not true, Clark. The SEC goes after individuals too. They go after individuals all the time.
Yeah.
Yeah. Well, yeah, Hurt Scrambler. If you've got any freaking MLPs or anything like that, then yeah, K1s, all that stuff. I had something to say about the IRS and taxes, and I don't remember what it was.
Bottom line is it's a complicated.
Oh yeah, I know what I was gonna say. They got Al Capone for tax fraud.
That's true.
They nailed him for tax fraud. The
That's
IRS,
what they finally got him for.
not to be reckoned with. They got Al Capone. They can get you. They can get me. They got Al Capone. What were you about to say? Sorry, I interrupted you.
I was just saying, it's just to me, it's such a shitty
System?
why I should just get a statement like January 1st that says, or 2 weeks after the new year that says, hey, here's how much you owe in taxes. Here's how we calculated it. It shouldn't be on me to fucking figure out.
Yeah. Wait. You know the Bad Luck Brian meme?
Yeah.
Yeah. So Bad Luck Brian cheats on his taxes in 2019 and then doesn't get stimulus checks in 2020. Because you only got a stimulus check if you're up to date with your taxes.
Yeah.
Bad Luck Brian cheated on his taxes in 2019 and got no money from the IRS or from the Treasury in 2020. That'd be funny if that happened to someone.
Wait, hold on. I'm gonna read this comment from Dimitri. Again, the rule is to protect retail investors from the inside buying, selling, and recourse for those who sold their shares before Musk.
Yeah.
disclosure.
Okay, so Dimitri, there would have to be some kind of like a class action lawsuit against Elon Musk. I mean,
So okay,
I don't know.
why was he supposed to file immediately?
Because that's the rule. The rule is you have a deadline when you cross the 5% threshold. When you own more than 5% of a company, you need to let the SEC know that you own more than 5%.
And then also, why did he do the type of filing that's specifically not for investors that are going to be like active?
I don't know. I don't know.
Okay.
I have no idea. Also, why was his share count wrong? Also, I have no idea. How do you even screw that up? We all know Elon's not doing this. He's got some banker doing it for him. Why did they screw that up?
I'm so like honestly kind of sick of talking about Elon Musk.
Okay, fine. We can move on.
No. I didn't mean like today. I just meant like in general. Like I feel like every day are like most read articles at Benzinga are about Elon.
Dude,
Musk.
it's insane.
Or Dogecoin.
You guys want to know? You guys want to know why like you see so many articles about Elon Musk or Tesla or Doge or it's because people click on them. We don't do it for our health.
Yeah, more than anyone else. More than Trump. More
people
than Biden,
click on that.
More than Justin Bieber.
It is insane. Anyway, let's move on from this. We spent way too much time talking about it. Hey, anyone still long SoFi with me? SoFi is not having a great day. In hindsight, I mentioned this morning. In hindsight, I should have seen this coming because the White House extended the student loan moratorium. I think they extended it through July, but SoFi came out and lowered their guidance because SoFi obviously issues student loans. Nobody has to pay student loans right now. So SoFi said they expect the moratorium to extend through the end of the year. So their guidance today reflected that no one's going to be paying them back. So down 11% here, down to $7. How low did we get before? Oh, is this an all-time low? Oh, all-time low in SoFi today.
No way. What's that? $8?
772.
Holy shit, Spencer.
Wait. What was the low from the 14th? 774.
Remind me to never follow you into a stock
774 was the low. We're at 772 right now. Oh. Wait, you guys can't see the chart. Ouch. This is painful. This is painful. This one hurts.
I told my mom to buy this stock because of you, Spencer.
Oh, I certainly hope not.
I'm not kidding.
I hope your mom learned long ago not to listen to you or me. This is pretty brutal. Wow.
I give great investment advice. I just don't take that same advice for myself. Speaking of, wait, can we pull up the SPY real quick and go to like a 5-minute candles?
I just want to note on the SPY.
I want to find a fucking bounce. What are we gonna bounce?
Wait, I want to note on the SPY that the pre-market low. Wait, this is a 15-minute. Is that cool? Or do you want a 5? Yeah, I'll do a 5. All right, this is a 5-minute chart. All right. Do you want to know what this pre-market low was right here this morning? Do you want to know why we bottomed out right there? I'll tell you anyway.
Okay.
This is how afraid of the market. This is how afraid the market is of James Bullard. James Bullard started speaking at 9:00. At 9:05, headlines hit the tape that he sees interest rates going to 3.5%. We sold down into that, and then we just ripped higher after that. Market's like, screw James Bullard. We don't care. Of course, now we're lower again. So back to the 15-minute chart. Let's go to a daily, actually. Okay, I think this should be the play. The next time I want to start buying. I have a little bit of money to put to work here. A little bit of cash. Not a lot, but enough that I want to put it to work. I think when we get like below, what's the 50% on this move here? So let's go from the March 14th low. So the March 14th low was 415. What was the high? We'll call 460, 462, right?
Where's the
So 415, 462? What's the midpoint of that?
415, 60 between
415, 462,
422, 19.
438. 438 is your average. If we get to
where's this candle right here?
What that?
Yeah.
What's the high?
What's the high on
441.
That? Okay, 441. I like that level.
All right. If we cross below 438, I'll do some buying. How about that?
I'll back the truck up at 438. I'll take Ryan Faluna's mortgage on that.
Yeah, I'm not scared right now. If anything, I'm just like sort of impressed at that my prediction is coming true. My prediction of a chop fest for the year seems to be coming true for the
I
moment.
will say, Spencer, that's exactly what my
Advisor said.
yeah.
Really?
Yep.
Yes.
My Morgan Stanley guy, he said
Your guy?
he said, "Hey, I just think," he said, especially with the big names, the Apples, the Amazons, he said, "I think we're just going to chop all year."
Chop,
Or
chop.
maybe not even all year, but he's oh my god. He's so good.
All right. He's watching golf. All right. Today's top trending stock, everyone, is MNTS.
Tiger Woods,
Momen-
baby. That's your trending
momentous.
stock.
Momentous has momentum today, up 48%. Why? Because they announced a deal with SpaceX. They announced a launch services agreement with SpaceX.
Who didn't we talk to? What was that company we talked to that's doing like the
Oh wait, it's not. Wait. This isn't even new. Wait, this isn't even new news. Hold on. The Benzinga news desk noted that Momentous announced this deal on their March earnings call. Wow.
What was? Do you remember the space company we were on that was like the space analytics like data play?
Yeah. Shoot. What was the
I forget. We'll find it. We'll figure it out.
No, I'll find it right now. Yeah.
Oh, so I want confirmation. Let me check on if we got confirmation from Zoli that we're gonna reach out to Rick.
No, what was the name of
Hold on.
that what was that
Please
company?
Reach out to Rick.
It was shoot. It wasn't no.
If we get Rick for an interview, I'll have to bring our guy Mark Moran on for it because I know he's long Rick. I'm not kidding. Well, I don't know.
Dude.
He tweets about being long Rick. I don't know if he really is or not.
Was it Spire? No. I know. Oh, it wasn't Astra. No, I don't remember, man.
Someone said they love Boeing down here.
Okay. Speaking of Boeing, I have to watch that documentary.
I know. I was gonna ask if anyone's watched it because
I didn't want to watch it before I flew, man.
Oh, speaking of flying, I'm trying to buy flights right now to New Orleans, and it is impossible to
Really?
like.
Well, it's because you want to go in like a month. Don't you want to?
Is that,
like
is that
2
are you
weeks?
saying that's like like too short away? That's like double when I normally look out for flights.
Yeah, I think. Oh, I think it's.
Usually like 2 weeks is usually. Sometimes I will. Sometimes, the closer you get, the more flights prices. Will
So
drop.
I'm
not most of the time. But
I'm
sometimes.
I'm not going to go to the Berkshire meeting.
Really?
Yeah. So I was tracking the flights for that. To
It's
Omaha.
not that far. Take a drive.
Take a drive.
Yeah, man. Omaha.
Drive to Omaha. It's like a
Yeah.
24-hour drive.
No way. There's no way that's true. We're in the Midwest. Omaha's in the Midwest.
The Midwest is big.
is big.
Let's look it up right now.
There's no way it's a 24-hour drive, though.
It's 24 hours from New York to Florida.
Yeah, that's across the country. Or that's down the whole coast.
All right, here, Omaha.
I'm guessing 11 and a half hours.
Oh wow! All right, it's 11-hour drive. All right, fine, you win. I stand corrected. But it's Nebraska, dude.
Yeah,
Anyway,
you'll probably find a cool. Look,
Oh,
like,
but
you go through St. Louis. No,
it's barely in Nebraska. It's basically Iowa.
Yeah, you can stop in Des Moines.
I've been in Des Moines.
Yeah, you know.
I've been in Des Moines.
There'd be some cool things you could find.
I don't need to go back to Des
There'd be
Moines.
some
I've
cool
been there.
sights you could see.
I spent a whole weekend in Des Moines once. That was enough for me.
I wish there was. I wish there was another option besides like train and flying and driving.
Yeah, there is Elon's high-speed rail, the Boring Company.
Dude, well, okay. First of all,
You-
those are two different things: high-speed rail and the Boring Company.
Wait, the high-speed rail, the Boring Company is the tunnel, right?
Yeah, but I thought
LA to San Francisco or LA to New York.
I thought they were gonna put.
I don't know.
Were they gonna put a high-speed rail in the tunnel? I thought it was just you were gonna drive in the tunnel. And
I have
there's
no
just
idea.
less
I have no
traffic.
idea. I don't know.
I don't think Boring. I'll be honest. I sound like a big Elon hater today, but I don't think any of his like ventures outside of obviously SpaceX and Tesla are like legit.
Speaking of SpaceX, there's rumors about IPOF and SpaceX. Bring up the chart. IPOF SPAC, right? One of Chamath's. There's rumors about a SpaceX thing. Nothing confirmed, obviously, but you can see it on the chart. See his massive volume spikes. That's a SpaceX rumor. Okay, Sam, I'll go back to Boeing. Wait, who said they like Boeing? Was it Sam?
Someone said they loved Boeing.
Why do you like Boeing here? Tell me. I would be interested. Let's go back to Boeing. Let's go back here. Let's go back 2 years. 3 years. We'll go back 3 years. That's what this is.
See, this is cool. Google Flights will tell you the price history of these flights, and
Yeah.
it's actually gone down in the last month, which makes me think,
Wait, what are you looking at now? New Orleans?
yeah,
Yeah, see, the Omaha flights kept going up. So
$358, but I have to fly Spirit.
dude.
And see, here's the thing. I can buy this flight, and I have like a 50-50 shot if this flight even takes off.
I know. That's the thing with Spirit, right?
Also, I might be traveling on my birthday. The Thursday that May 5th is my birthday, and that's when there's this like festival going on that weekend, and some of my friends are going to, and I'm actually Sue from Benzinga is going to be there. I'm really excited.
We may have to cancel Benzinga Live that day because I won't
On
be
Friday?
I won't be here either on May 5th.
Well, that's Thursday.
I won't be here on Thursday.
You won't be here Thursday or Friday?
Thursday or Friday. I'll be in the great state of Maryland,
Hell yeah.
home of crab cakes and football. But
And the Maryland Terps basketball team, how far did they get in the tournament this year? Oh,
no comment.
not even the NIT?
No comment.
No comment.
No
Okay.
comment.
What about the CBI?
No comment. I'm not commenting on it.
Okay.
No comment. Anyway. Okay, this is what we'll do before we have a couple minutes before we're going to bring on our next guest, David Vincent. Before we do that, got to remind you guys about the Benzinga Stock Market Madness contest. We are into the championship round. I'm going to put the link up on the screen right now. Here it is, benzinga.com/stock-market. We are into the finals. It's Tesla versus Cadre Energy, ticker CEI. Cast your vote. You could win $1,000 worth of Bitcoin. That's always fun. Here's the matchup. Tesla versus Cadre. Cadre Energy just mowed through the competition. Voting ends tomorrow. So your last chance to vote here for Tesla or Cadre Energy. Here it says up at the top of the screen, you could win $1,000 worth of Bitcoin. It says it right there. We'll have to go over the winners on Monday's show, or the winner on Monday's show, and who actually gets the Bitcoin prize. Check it out. Link up on the screen, benzinga.com/stock-market. Once again, thank you to Public for sponsoring this contest. We appreciate that. Public is the investing platform where you can build a modern-day portfolio your way. Invest in stocks, ETFs, and crypto all in one place. So start investing today and cast your vote for Benzinga Stock Market Madness. The first part of that, though, is more important. Start investing today. If you're not invested, just start. That's the most important thing. Just start. I know I'm preaching on the choir here, but you guys know. Just start. That's it. Stock Market Madness. NFT Madness, I think, is over. I think the NFT Madness. Oh no, we're in the semis on NFT Madness. It's the same link as the other one, just instead of stock market, it's NFT. I'll put that up on the screen right now too. NFT bracket. There's the link. NFT Madness. Check it out. We're in the semis. It's Star Catchers versus Doodles and Lazy Lions versus Crypto Dads. Do you not know what those words mean? Then you need to watch the roadmap. 2 p.m. Tuesday, Wednesday, Thursday after this show right here on YouTube. All right. What is it based on? It's popularity, Kyle. Popularity contest. That's all it is, man. Popularity contest. MW Quarry, I just saw like baseless speculation on Twitter. That's why I said it was rumors. Nothing confirmed. Just baseless speculation. But the volume spikes would indicate that people are seeing that. So, okay, let's do this. It's 1 o'clock, guys. Let's pop the headphones on. And if you recall, last week, we did our very first recurring segment on real estate.
Woo!
We don't talk about specific sectors at length enough, in my opinion. Aaron and I can give our thoughts, but it's nice to go a little bit more in depth, or double click, as the venture capitalists like to say, startup bros. So joining us now is David Vincent from Cadre. Cadre is a real estate investing platform. And if you missed last week's segment, we just kind of broke down the structure of the real estate sector, how to invest, right? You've got public real estate, private real estate, you've got REITs, you've got industrial, residential, commercial. But the impetus for doing this segment, when we're doing it, frankly, is because now is a very interesting time to be watching real estate. So without further ado, let's bring on David Vincent from Cadre and talk about why now. Why real estate? Why now? Here we go. David Vincent, investment specialist at Cadre. How are we doing today, sir?
Doing very well, Spencer. It's great to be back.
Great to have you back. So we are here for round two. I just sort of teed it up a little bit there, but we're talking about real estate, but specifically real estate today, right? Because I think, and I'm imagining that you have had a very interesting 12 months as we've seen inflation go up more than it has for 40 years. And that has serious implications for the real estate market. So, well, let's talk about this. Let's talk about real estate, and let's talk about the implications for all of this and what's working for it right now. Let's start with this. Just give us a sense for the last 12 months since we've seen inflation really start to ramp up here. What has happened to the real estate sector?
Yeah, absolutely. So you frame this as why real estate now. I think real estate is an always investment myself.
Yeah.
What's interesting is as with any asset class, you have cycles, right? And we just came through a pretty epic period with the pandemic and COVID and what that meant for us. And now, as we're hopefully seeing, green shoots of life beyond the pandemic, we're now faced with a historic increase in inflation that's kind of just ripping right now. And of course, is all over all the headlines. So there's a lot going on in real estate. And, again, I think I mentioned this last week. People often think of real estate as one big homogenous kind of pool, but really there's so many different asset classes. And when you look at any macro event or effect or impact on the global economy, it's going to impact different parts of real estate differently, right? And so one of the ways that I've always been framing now the impact of like the pandemic on real estate is more that it's accelerated a lot of the existing trends that we saw. One example would be office. It's, maybe not entirely work from home is what was happening beforehand, but we saw less centralization of offices in general. Amazon is a great example. Pre-pandemic was already setting up these regional headquarters all over the place. More and more companies were breaking into that type of model instead of a centralized office where every employee would be 5 to, 7 to 9 or whatever during the day, right? 7 to 5, then,
Yeah.
right? So that's one area. Another one certainly is retail. We haven't been too bullish on retail for a while. Clearly, the big malls are struggling. But really, this was long predating the pandemic, is the explosive growth of e-commerce. It's just so much easier to click on an Amazon or a Walmart or whatever and have your package in 2 days and just not even have to, put on pants to go do it, right? So more and more people are shopping there. But what that's also led is an explosion of demand, especially through the pandemic and over the past 2 years in warehouse, supply chain, anything that has to do with distribution, logistics. Those types of sectors have really, really done very well. And then just thinking, high level, the next area where I think has been a big beneficiary has been multifamily. We've seen very strong growth in the multifamily sector. So the chart you have up here is actually, it's a 2-year chart. This is our proprietary data. we're tracking all the different transactions across 50 different markets throughout the United States. And that first bar is from the beginning of 2020 through the end of last year, so a full 2 years of the pandemic. All asset classes up about 8% over that 2-year period. And then you can see which ones perform better. Retail all the way on the right, the still positive, but really kind of chugging along, just grinding through there. But apartments, which is multifamily, been really doing strong. Industrial doing very, very strong as well. Office, I think, surprising people with its outperformance. And with apartments and multifamily, really, again, this goes back to accelerating trends. Is people want to live where they want to live. It used to be that if all the jobs were in New York City, San Francisco, or LA, or Chicago, that's where you had to live. But now that companies have accelerated that trend towards more regional, offices, people can actually get jobs in Nashville, in Austin, and we're seeing this massive migration of people as well as jobs and offices moving into those markets. And so, you have a kind of a bifurcation, really, is what's been happening in the market.
I'm looking at this chart here, and so I see industrial and APT is apartments. Is that right?
Yeah.
So those have dramatically outperformed
Yeah.
the rest of the sector in the last 2 years.
But
Is that
outperform on strong fundamentals, which I think is key. It's not just that.
is that normal? I don't know, like, just your knowledge of historical trends. Is that outperformance normal or no?
So these levels of returns, I think, are not in line with historical averages. These are above trend, right? And so, again, the pandemic has accelerated a lot of this. What we're seeing in multifamily is, if you look in the Sun Belt compared to, the Northeast, you're getting a different experience, right, in return profile. Industrial, there's been a big shift in mentality. It's, easy to forget that transportation is roughly 50% of the cost of supply chain management. So right now, it's hard to find truckers, it's hard to find trucks, and it's more and more expensive to do that. So it makes sense for companies to spend more building out warehouses and distribution facilities, last mile. Even though those costs are rising, that's only about 5% of the overall supply chain cost. So there's almost an arbitrage there for companies managing their supply chain. And what we've seen is a shift from just in time to just in case. Companies in many cases are actually building out more capacity than they need right now because they're worried about future supply chain disruptions.
Nobody had the just in case before. Everybody had just in time, and then just in time works on.
Yeah. And that goes back to like what the 80s and Japan and the technology and all that stuff. So
right, yeah, works until it doesn't work anymore.
Yeah.
All right, I'd be curious to. I want to bring up this chart next year. This kind of just shows the S&P REIT index going back more or less the same type of information that the previous slide showed, just in a different index and in a different way, but it's the same time horizon here. So this is clearly showing us, I mean, real estate, like the rest of the market, did rebound from the COVID lows. But what else do you see from this chart?
Yeah. So, I mean, just to be clear, you can see by the dates on here, this is a little bit different, right? So we're not trying to show the same exact time period,
Okay.
but this is, call it a year and a half, right? So this is what I take away from this is, if you're accessing real estate in your portfolio just through publicly traded liquid REITs, again, we talked about this last week, that's only roughly 10% or a little less than 10% of the total real estate market. So you're only investing in a narrow pool of real estate. But because of the volatility that comes with anything that has, daily trading on the stock exchange, you're not getting the diversification benefits of privately owned real estate, right? Direct ownership of real estate. And this is what that's showing you, is that at the beginning of the pandemic, listen, I'm in this bucket as well. Everyone thought real estate was toast. No one's ever leaving their house again. No one's ever traveling again. Certainly not getting on a plane to go to a hotel. No one's going back to the office. And, everyone freaked out. And what you saw is that everyone traded out of real estate in their portfolio. They made a bet, right? And it was a knee-jerk reaction that at the time, there was an argument for it, and maybe it made sense. So what you're seeing here is that the volatility in REITs, and in this case, this REIT index, is sentiment in the now, what people think the future holds for real estate. it's not based on the fundamental value underlying the real estate in the portfolio. You can have a disconnect. REITs can be overpriced or underpriced. In this case, I think we undershot, right? So the pendulum swung way too negatively. And you can see that it actually took like, a year and a half, all the way until June of last year to actually just recover and get back to break even. But if you look at that prior chart, what those numbers showed is that the value of real estate kind of steadily, it was either flat depending on what market you were in, or steadily climbed. You didn't have massive drawdowns in the market value of the assets that the REIT held. But if you own the REIT, I mean, if you held it through this period, you get your face ripped off. So it was challenging. And that's where private real estate versus public real estate options, illiquidity is often viewed as a big negative. I think that it can, in many cases, be a big positive for investors. This shouldn't be 50% of your portfolio, right? Private illiquid investments. But having an allocation to it, you don't need to access every penny of your investment portfolio on the fly. So having an aspect of your portfolio that's locked up longer means that you're more likely not to have this knee-jerk reaction and sell at the worst possible time. And I think long term, that's good for investors.
In some respects, illiquidity can serve to protect you from yourself.
Yeah, absolutely.
People
and there's been a lot of studies in behavioral finance about that. Absolutely.
Yeah. Okay. So obviously the real question here, the elephant in the room is rates, right? Rates are going higher. It's not a question of if they are. It is a question of how high they will go and how fast they will get there. Some debate about that, even amongst people at the Fed, and that's the elephant in the room here. But amidst this rising rate environment, how is this impacting the real estate sector right now?
Well, I think there's a number of ways to, really think about it. But clearly rates are moving up. The Fed's already hiked the first 25 basis points. And I think clearly it's a safe bet that it's going to continue in that direction for some period of time and at some pace that we don't know, right? Some estimates, I think I was reading this morning that the market's pricing in 7 more rate hikes this year. I'm not sure if we're going to get 7 hikes this year, but it doesn't matter. That's at least directionally where the market views it. And so it has a big impact on real estate, right? So these are, pretty big deals that we're talking about. We tend to invest in, call it $50 to $150 million transactions. Debt is a big part of that financing, right? So it's a part of the capital stack. Interest rates, therefore, are important to the financing of real estate. Now, I would argue that if you're looking at a deal today that you're underwriting and 25 basis points in your interest rate is going to make the economics no longer viable on that deal, you probably shouldn't have been doing that deal to begin with. So there's certainly, I think, a margin before there's a real impact on underwriting and where it moves cap rates. We haven't seen cap rates expanding yet because of rates. Now, if you think about it, though, in the historical context, I know I look old, but I feel like a pretty young guy.
You look young enough to me.
I'm sure much of the audience here today listening to us, grew up over the past 20 years. High rates are not something that we're used to. I remember I was studying for the CFA, and the teacher of the course I was taking was telling me that I forget exactly when, it was maybe in the 70s. He bought a 30-year treasury that was, like 17% or something like that. He was like, if you ever have a chance to put all of your money into something like that, do it right away. High interest rates can actually be a good thing. But I'll tell you, if we're in a world where you have 17% interest rates on 30-year treasuries, that's going to be the scariest time to make any investment. Right?
Yeah. We haven't been in that kind of a world for quite some time.
And I'm not begging for it. Trust me, I'm not wishing for it. But it's easy for us to forget that for a long time, rates were much higher. And real estate actually did quite well. And so I took a deep dive into interest rates with our data science team not too long ago. And we did a study. We went back all the way to 1979, and we looked at different periods. So we really categorized 3 regimes of interest rates, whether they were high, low, or medium. And so you could see the average rate for high is about 10%. The median or the mid regime is, call it 5-ish%. And then the low is, call it about 2, which is a little bit higher than what we've been having recently, nonetheless, right? So historically, though, private real estate performance has been not only positive, but outperformed interest rates across all interest rate periods. you'll notice that real estate returns have historically been the highest in high interest rate markets. Now, what this means isn't that if interest rates were to quadruple overnight, expect your real estate performance to jump, right? It's the transitional times like now where interest rates are changing the economics of deals that people are underwriting. They're changing the economics of new construction and financing for, a new development and things like that. So you have to be really thoughtful in managing the interest rates, whether you're using floating with caps or you're trying to lock in fixed rate, the duration that you're taking on these loans. At the end of the day, though, whether interest rates are high or low, private real estate, I think, makes a heck of a lot of sense. If you have a good operator, a good property, and a good location, you have a good chance of making money in regardless of the interest rate environment. And that's, going back to my first comment, right? I think this is always a good time for real estate. It's a question of the right real estate at the right time.
What are we in? We're in a low rate regime now. What qualifies as a mid rate regime?
So that you can see here, right? That light, I don't know what like.
Duh! I didn't
Yeah,
look
it gives
at
you about 5%
okay.
or so, and that's so we're in the process right now of going from a low rate to a mid rate regime, and this isn't arbitrary. We kind of did this, breaking this down into equal periods of interest rates over the past whatever since 1979. So about as long as I've been alive.
I'm just curious, like in just talking about the last 2 years, right? I mean, what have you seen, or what has Cadre seen in terms of deal flow activity, investor activity? I mean, are people more bullish? Are you seeing more activity in the last 2 years? I say 2 years, but really, I guess it should be. Inflation has become a topic really in the last 10 months, I guess. So maybe since last summer, but like, what have you seen on the platform in terms of both investor activity and just deal flow?
Yeah, I'd say, certainly early stage of the pandemic, everything kind of ground to a halt, both interest in deploying capital as well as deal flow. You didn't have kind of this wave of distressed deals that people expected. But over the past year, our pipeline has been incredibly robust. I mean, we see thousands of deals that come our way. We only bring in a small percent of those where we do any level of diligence on. And of that smaller bucket, it's only like 1% to 2% of deals that we actually pull the trigger on and execute on. So we have, a wide range of deals. We're flexible enough to invest across the U.S., across asset classes, everything from ground up development to fully stabilized core as well. So we have, I think, a lot of stuff that comes our way because of that. And we have a lot of great partners. Now, on the investor demand side, there's, I think, been a ton of demand. It's a question of how you access it and why you're doing it. Some people I talk to are focused on reducing volatility and, long-term capital appreciation. A lot of people are looking for yield. And there's been this stretch for yield over the past several years, people getting more and more into levered loans or high yield investments. A lot of private credit's been going around. And with real estate, you can see that it's a relatively stable investment that you can understand. And you can see how it's going to pay cash flows. Like a hotel, you know how it operates. And you can understand why it's going to give you a, upper single digit yield relative to something else. It's not based on derivatives or, financing, warehousing and, CLOs and that type of thing that, quite frankly, I think not enough people really understand. But we actually saw the demand from individual investors this past quarter. They've committed more money to deals on our platform than in any other quarter in our history. And I'm thrilled with that. If anyone in the audience is an investor on Cadre, thank you very much. It's because of all the people in our community that have been supporting us. But I think that really demonstrates the increased demand. And we've seen that with our deal flow right now, not just our pipeline of deals we look at, the pipeline of the active deals that we have on our platform right now, I think is the highest. Well, it's certainly the highest that I've seen it since I've been here. And it might be the most active deals that we've ever had in our history.
I'm making sure that you don't hear that. I'm hearing a Slack call, but I think that's from my producer. I want to make sure it wasn't me.
I silenced my Slack before, although I have my dog grunting in the background.
I just had a brief panic attack. I was like, is someone calling me? Nope, no one's calling me. Okay, it must be my producer. So okay, walk us through like the next like year or two in terms of like the bull case and bear case here for real estate, or if you want to drill down even more, like the different sectors within real estate.
Sure. Well, I mean, we'll start with the bear case, right? And if you think about the bear case for real estate, if you had massive recession or stagflation, something, real estate is tied to economic activity in many, many ways. However, it doesn't mean that real estate will necessarily tank, but it will certainly create significant headwinds for the commercial real estate market. Now, on the bull case side, I'm not calling for stagflation. I think that job growth, wage growth, there's a lot of really strong economic fundamentals at play. Although we're in a brave new world where interest rates are this low and inflation is this high, I don't think we've ever seen this dynamic before. And then you get into all the other supply chain disruptions that aren't even related. So a lot of the inflation we're seeing, some of it is supply chain disruption and some of it's consumer demand. The world's crazy right now, and it's always new. And that's what it makes it interesting. But the bull case, right? So residential, multifamily demand is continuing at a blazing pace, and especially in certain markets. So if you look at a Charlotte, a Nashville, Austin, places where people want to live and are moving to, we're seeing demand in many cases outstripping supply. And because of a lot of supply chain disruptions right now, you're not seeing a lot of new construction or as much as you typically would. So supply is struggling to catch up with that demand. So I think that gives us good runway for the future, for the foreseeable future there. Industrial, this isn't changing anytime soon. E-commerce is still, I forget the exact number. I think it's less than 15% total market share. So there's a lot of room for e-commerce to grow, and it's going to continue to grow. And the demand for industrial space is going to continue. There's a lot of opportunities in that market. Absolutely. Now, office and hospitality, I think we're in the, firmly in the recovery mode. It's now a question of what recovery looks like. And there will absolutely be opportunities both with office and hospitality. I think you need to be more targeted in your location, where you're going to be, and also the specific asset that you're investing in. Some office assets are absolutely going to struggle. Some, if it's newer construction, has better amenities, and it's in a good location, we're already seeing those commanding premium rents and long-term leases. So there's no challenge there, right? And then hospitality, if you're a old school convention center, relying on businesses to come in and have a big conference, it's very different than if you're in a college town or a drive-through market, a Savannah, Georgia, or a Nashville, where we're actually seeing pretty robust demand in those markets for hotels.
Walk us through the potential bear case here for all that.
Well, so I think that goes back to that, does the economy stall or start to roll backwards, right? So if we have a massive recession, and so again, thinking about the right assets in the right locations, let's say you go into a recession, thinking about hospitality, that doesn't mean that people aren't going to travel anymore. There's still a ton of pent-up demand. So the premier flagged hotels, the top tier, generally not as touched during a recession. Rich people are still rich, even in a recession. It's people like me that get hurt more. But we also see, though, is select service. So the other end of the spectrum tends to do well during a recession, or tends to do better because they're cheaper and people still need to travel or want to travel. Office, even if you have a recession, unless there's a wave of bankruptcies, companies need to have a physical location, and they're locking in 10-year leases. And what we've seen in the past through recessions is that in the office market, collections and companies pay rent. They're keeping their lights on. They're still doing the stuff they need to do. That's baked into their business model. It's when you have bankruptcies that you have issues there.
Yep. David Vincent, investment specialist at Cadre. I would encourage anyone who wants to learn more about Cadre or even just real estate more broadly, click on the link that is both in the description of this video and pinned to the top of the chat. I'll put it on the screen if you want to actually copy it. There it is, but it's much easier. So just click on it from the description in the chat. So I would encourage you to do that. David, this has been great. We will have you back on again next week to keep on going here. In the meantime, are there any questions? I don't want to let you go before I get any questions from the chat. If you have any questions from about real estate right now, speak now or come back a week from now, because that's when David will be back on.
Questions are always my favorite part. So.
Yeah, the questions are the best part. That's why I like to ask them. David, Vincent, a pleasure as always. We'll talk to you again next week. A lot to unpack here in terms of real estate. Have a good one.
All right. Thank you, Spencer. Bye.
All right. Hey, guys, while we were just on with David, something fierce just happened in the markets. What is going on? Aaron, fill us in. What did I miss?
Well, so Spencer, I was scouring through Benzinga Pro looking for the explanation to this rally because the only thing that I could think of was that someone out there got wind that I was looking at SPY calls and they went out and, it was trying to front run me.
Definitely what happened.
That's what happened. It's actually not what happened, Spencer. What happened right now, and these moves can come from a number of different reasons, but there are reports that the International Energy Agency, which, full disclosure, I did not know was a thing.
The IEA,
but
you don't know about the IEA?
The IEA is a thing. Rest assured, the International Energy Agency will make 240 million barrels of emergency oil stocks available over the next 6 months. So, the reserve release we got in the U.S. that drove oil prices down is considered pretty small by experts. This is a bigger deal. The 240 million barrels of export barrels.
Why is the USO going up though? Shouldn't the USO be going down?
Well, that's a great question, Spencer. This is not the. I don't think the IEA thing is like the end. Like why 100% SPY is going up right now. I think it's a factor. I think we'll have to do some more digging to figure out just exactly what this move is. But I did want to announce I did get into some SPY calls that expire tomorrow, the ones that I was talking about before. I said I was going to wait until we got down to our level. I decided to kind of start averaging in, so I bought a few calls, and if we did dip down to that 443 level we were talking about, I was going to buy more. So full disclosure, I am in the SPY calls, up 54% on them right now. Can't sell them till tomorrow, so I'm just here hoping we continue to rally throughout the day.
Right. Some other things just started ripping. Let's get off of oil. Let's go to I saw someone mentioning Target here.
Whoa.
Target's mooning. Target's up $11 today. Target's best day since earnings, March 1st. Holy moly. Wow. Target have news? Something happening in Target today? I mean, just the whole market? Dear Lord. Target sees its resistance and says, I don't care about you. Technical resistance, 228. 229. I'm coming for you. Wow. Look at that Target move. I didn't see that until somebody mentioned it in the chat.
Target. What's the divvy on Target?
I don't know. They got that yield, small yield, 1.7%. That's I mean, for a retailer, that's okay.
Damn, why is Target breaking out here? We're still not even near.
Oh, it's not just Target, because also look at Costco.
260 is like the all-time high in Target.
Look at Costco today.
You were just talking about Costco yesterday?
Because every damn day, and Walmart, which we already talked about.
Damn, Costco. It's like
look at Walmart. It's the whole sector. There's no news. Was there like a retail sales print that I missed? No, not on a Thursday.
And not in the middle of the day either.
Yeah, I don't know. Oh, Barclays.
Barclays gave a note on.
What was it? A broad retail note or just on Target specifically? Damn, man. I guess I should know that. I honestly stopped looking at analyst ratings. Let's go to the ratings calendar. I don't look at ratings anymore.
I think Barclays also put a note out on Ford today. And there's also a note on Roblox. Let's talk about Roblox, Spencer.
Okay, wait, let's do that. But before we do that, though,
SPY just turned green on the day.
Wait, I don't look at ratings anymore because they're not important. But here, let's go to the calendar in Pro.
How often does the S&P fight like the SPY? How often do you get dividends for that?
It's quarterly, I think.
No, 30-day yield.
No, you don't get a monthly dividend.
It says 30-day yield.
No, but that's based on
That's based on the
that's based on the
quarter.
price.
Oh, okay.
Like dividend yield formula.
But
right?
typically, and I'm just in Robinhood right now, typically if I'm looking at a stock, it doesn't say 30-day yield, which made me think, oh, maybe it's different.
SPY does not pay. There's no way it pays a monthly dividend. Is it? I mean, do we have any? All right. Yeah, okay. So Barclays was negative on Ford today. Nothing really jumps out to me. Wells Fargo going to underweight on Wayfair. Didn't Wayfair just report like a couple weeks ago? Initiations I never cared about. I only just care about upgrades and downgrades. We had a lot of ratings today.
Yeah.
Interesting.
Ford, I think, got one. I think
Yeah, Ford got a downgrade.
Roblox got a buy from Citigroup.
Yeah, so that Citigroup thing. So here, let's do this. We're in the calendar. We just go to sort by analyst firm here. And we have Citigroup here. You see Roblox initiated at a buy. Unity initiated at a buy. So the same analyst is bullish RBLX and U. Let's go to U first. How's that doing today? It's flat. How's Roblox doing today? Getting crushed.
Wait, Roblox is getting crushed on the buy from
down
Citi?
4.5%.
That's not a good sign.
Crush is a strong word. Did you see how much money the Roblox CEO made last year?
How
It's
much?
insane.
Did he get paid in Robux?
I think that's the question, right? Check Humana. All right.
All right. Tiger update. He hit a bad tee shot. He's stuck under some trees.
Is Tiger done? Question mark.
Is Tiger done? Question mark. Nah, fam.
No.
All right. You want a quick history lesson? He's like even through the front nine right now. In 1997, Tiger.
I was negative 12 years old.
I was like, my mom was like 8 months pregnant with me.
Okay.
Masters 1997. I was born in May of 97, so I was born a month after.
I was 6 years old.
But 1997 Masters, for all intents and purposes, is really when Tiger kind of burst on the scene. He won the Masters, I believe, by 12 strokes, the largest.
I think it was 11.
11, the largest winning margin ever in the Masters, maybe in major history. And then I know Tiger did something similar at the U.S. Open a few years later. But he just went on a crazy. Here, I'll just pull up the 1997. I'm just curious. 1997 Masters leaderboard. So
after this, guys, we're doing trivia, by the way.
Tiger finished 18 under par. The second place finisher was this guy named Kite, who was 6 under. So he beat Kite by 12 strokes, 18 under. The next best was 6 under. He started that round 4-0, or he started that tournament 4 over on the front 9 of the first round. So the fact that he's even right now through the first 9 is like, wow, he was 4 over when he finished 18 under. So he's doing fine.
I could also win by a lot of strokes too, backstroke specifically.
You what?
I could win by a lot of strokes.
There you go.
Yeah, backstroke.
You're a good swimmer. I didn't know that.
No.
Joel's also a pretty good swimmer. Or so he says.
Joel's a good swimmer. All right. It's 1:30 on a Thursday. Usually this is when we do trivia. So let's do it.
Let's do it.
Let's do trivia right now. We have some questions prepared. Producer Enver, I think, got them made today. I believe the category is like general businessy type stuff. Business. I'm not sure, though. We're going to find out. I have no idea what these questions. Oh, my gosh. We're starting. All right.
Slogans.
If you've never played trivia, here's how it works. Enter the number of the answer that you think is right. So if it's number 1, if it's option 1, put number 1. If you think it's option 2, put number 2. Put it in the YouTube chat. And it will tally our responses. And whoever gets the most questions right will win some Benzinga swag. Let's get some tunage going. While I do that, please read the first question.
All right. The first question is, whose slogan is it? Where's the beef? Is it 1, Whataburger? Is it 2, Wendy's? Is it 3, McDonald's? Or is it 4, Burger King?
So wait, so we're doing slogan trivia? I guess that's what we're doing.
I don't know.
All right. Where's the beef? Isn't that Wendy's? The tiebreaker is going to be who got it the fastest, but Pretty sure it's Wendy's.
You're not supposed to say, Spencer.
I guessed. Well, I didn't make the questions, man. I'm allowed to guess.
Oh, okay, that's fair.
Is the music too loud? How's that? I think typing the answer may also work. Nobody got that wrong. We're all so smart. All 350 of us. That was too easy, Enver. Got to come at me harder than that. You come at the king, you best not miss.
What's that from?
It's from The Wire.
Correct.
Best show ever.
All right.
Oh my
Whose
gosh.
slogan is it? Hooray beer.
These are so easy.
Is it 1, Stella Artois?
Enver, you're killing me, man.
Is it 2, Red Stripe? Is it 3, Heineken? Or 4, Budweiser? I actually didn't know this one.
Oh. This is too easy.
But you say he's just a friend. But you say he's
It's beer.
just a friend.
Hooray, beer. This is basically a Friday for our show, so we're feeling, got that Friday vibe on. Oh, my music ended. Let's do it. Oh, no, there it is. It's back. All right. Yeah, wow. Wow, this is a first. No one's gotten a question wrong through the first 2.
Man, what is this?
Enver, you underestimated how much Americans love their
Oh my god.
food and fast food and beer slogans.
Enver, all right. I bet. Let's see if we can all get all of them right.
What did I just do, guys?
Once you pop, you can't.
Oh,
You
I know
can't
this
stop.
All right, once you
Shoot.
pop, you can't stop. Was it 1, Pringles, 2, Lay's, 3, Frito-Lay, or 4, Doritos?
Wait, did I get this one wrong? No, everyone's saying 1. Okay,
Yeah, it's Pringles.
okay, all right. All I know is about Pringles cans is the cans are too small. Although at this point, the strategy should be just to wait for the crowd because the crowd's going to be right here. Once you pop, you can't stop. Pringles. Wait, aren't all of these like made by the same company? Doesn't like Pepsi?
Frito-Lay.
Doesn't Pepsi just own like all of this stuff? Maybe? No?
Oh,
Ooh, we had a couple people guess Lay's.
I think Lay's had a very similar slogan, like "so good you can't put them down" or something at some point. Like they were very.
I
Or
don't
you
know.
can't just have one. I think that was.
I thought, no, I
Lay's.
think that's Cheez-It.
You can't just have one.
I don't freaking know. I don't eat chips. I'm not a chips person.
Oh, there's an FOMC.
The ultimate driving machine. Oh shoot! I want to say it's Mercedes.
I feel like it's either Mercedes or BMW.
Yeah.
I'm gonna go
Oh,
BMW
shoot.
here.
I may be BMW.
I'm gonna go BMW here.
I think I said Mercedes.
Oh, well, we're getting divided this
No,
time. We're
oh.
getting 2s and 4s. I'm seeing more 4s.
I think it's
though.
BMW. I guessed Mercedes.
John Mellencamp, big fan of your music, just guessed Lexus. But he typed in Lexus. That's not how you select your answer. You have to type in the number.
No, it might work. It
yeah,
might
it's
work.
gonna work. It's gonna work.
If you type out the response, it might also read you.
Yeah.
Man, I think I'm wrong on this one, which is a bummer. Yeah, it's BMW. Shoot. All right, we have a clear separation now.
Hell yeah.
We have like a 17-place tie for first.
Hell yeah. Spencer, good luck getting back in this one.
Yeah, it's gonna be tough. How many questions are even left? Let's find out.
2 more.
That was one more.
2 more.
2 more. Oh man. Okay, it's gonna be tough to come back here. 5 of 6. Democracy. Oh, this is easy. Democracy dies in darkness. Oh wait.
Oh, wait.
Wait. I'm pretty sure. Okay.
No, Spencer.
Shit. Damn it. Did I get this one wrong? I got this one wrong too. Yeah.
Oh, Spencer.
Oh man. Oops.
This is what you get for talking shit on Enver for making easy questions.
Exactly.
All right. Everyone knows this one except me, apparently. Me and I saw a
You
couple
and
people.
Proton.
Yeah. All right. I knew it was a newspaper. I knew it was a newspaper.
There you go.
I didn't know
you
I didn't know
go.
which newspaper
There
it
you
was.
go.
Everyone's saying it's one.
It's Bezos's.
Okay.
Newspaper.
I knew it was a newspaper. I just didn't know which. I confused them all the time.
Okay. New York Times.
Wait, the other day, Luke came over to my desk. He says, "Go over to the Post." So I went to the Washington Post. He goes, "No, you did New York Post." he wanted to show me some like
A New
crazy.
York Post
He wanted to show me some
Go
crazy
over
New
to
York
the
Post
Post.
article. Because the New York Post has like the best content, man. Seriously, melts in your mouth, not in your hand. All right, this is
I actually have a fun trivia fact about this.
yeah. What do you got for us?
Did you know? I'm going to give it a few seconds so people can get their votes in before I tell my trivia fact.
Okay. Is the answer 50 Cent? Does that have to do with 50 Cent? Does he have the song lyric about this?
What?
Never mind. It's from that song, Candy Shop. Melt in your mouth, not in your hand. Never mind. Anyway. See, happy gets me. Thank you, happy. Okay, just tell us your fact.
M&M's was created by Mars in World War II, or maybe World War I, as a way for soldiers to eat chocolate without their hands getting sticky, so they wouldn't like jam up their guns.
Nice. I didn't
Like
know that.
chocolate on their hands.
I did not know that.
Yeah, fun fact. And there's actually a lot of inventions, like even food inventions that are from like either war or space travel.
I know the Kleenex was originally a gas mask in World War One.
Like exactly, like shit like that, like Tang.
Oh my God, are you serious now? Aaron Bree is not the winner here. Michael Crockett is the winner.
Let's go.
All right, we have a 5-way tie, a 6-way tie, but the order that it lists you in is, I think, based on speed. Yeah, that's why Michael Crockett is 2 and JRP is 3. So Michael Crockett, you are the winner. Congratulations. That was a wow. I came in. I did not do well. Michael Crockett, here are your instructions. Ready? Email shows@benzinga.com. Please put like trivia in the subject line so we know what you're talking about. So we get a lot of emails. We will send Aaron Bree, since he is the winner. Aaron Bree will send you over some Benzinga swag.
I have to send out some swag today, actually.
Thank you very much for those questions, Enver. I know I criticized you, but then I got a few wrong, so joke's on me.
It is fine, my friend.
Bye, Enver. Enver is probably my favorite person at Benzinga.
I agree.
Yeah, I think Enver is everyone's favorite person at Benzinga, which is part of the problem because
Jay Rice talking about the Masters. I did just see it. So Joaquin Neiman just hold out for Eagle was sick. I'm a big fan of Joaquin Neiman. He's this like young kid from Chile, and he's been on the tour for like 4 years. Before he joined the tour, he was like the world highest ranked amateur. And I don't know how. I was like, oh, this kid's like 19, like playing with the big dogs. He's pretty sick. So I started following him, and now we're like 4 years later, and he's kind of a little bit more of like an established guy now.
Okay.
But I was following him here in Detroit at the Rocket Mortgage Classic, which he almost won. He really should have won. And but Cameron Davis, damn, Tiger just hit another. Oh wait, this actually looks okay. Oh yeah, good shot, Tigers. Good shot, Tigers. Yeah, Joaquin's playing with Tiger, so it's like perfect for me. My two favorite guys on tour playing together.
Nice. All right. Since we're talking about golf, is it worth it to look at like Callaway or wait? What's the other golf one? Drive Shack.
No, golf.
No, DS.
No, golf. It's the ticker. Astronet. They own Titleist.
Golf is the ticker. Okay, fine.
Yeah, Astronet. They own, or Akushnet. I don't know how you say it. Some German name. They own Titleist.
They own Titleist, which I've never read that correctly because the T looks like an F to me.
Titleist.
Yeah.
Oh, I guess if you like grow up.
Okay, so Akushnet Holdings.
They own Titleist, FootJoy. Yeah, that's about it.
$3 billion
and
company.
Scotty Cameron. Don't forget Scotty Cameron.
So we have here. Let's look at the golf trade right now. We got golf. We got Callaway.
Well, I'm just saying that golf and Callaway are going to be a lot more comparable.
And we got Drive Shack.
Like Drive Shack, I don't think is comparable to either of those two companies.
They're all golf.
Okay.
Just go look at the last 15 months.
Jay Rice, who's not known for his putting? My boy Joaquim. I know. I don't think he is either, but neither is Cam Champ. But like I said, I'll take a $20 $20 bet on Cam Champ to win because he's a good enough putter to be a pro golfer, so he can get hot for a weekend and putt well. Like, it's not like he's, never made putts in his life. So who knows?
All right. Full disclosure, am long Callaway Golf, small position. I kind of forget about it half the time. So there's that. How's my Altria doing today? Not great. My Altria is in the red by 31 cents. Don't care. Don't care. My stop is set at 41. Or 51, excuse me. 51 or 51.10, I think. Somewhere around there. So either I make money or I get stopped out. That's that. All right. We got 15 minutes left here in the show. Oh, we're also, I just remember this. We're not doing a live roadmap today because some members of the team are in transit coming here for tomorrow for the quarterly meeting. So there's not going to be a live roadmap after this. We are doing a
You're in the office next Monday, right?
yeah.
Okay.
Yeah. Wait, like this coming Monday?
This upcoming Monday.
Yeah, I'll be here.
Okay.
Yeah. I got you.
So Dustin just asked me
if you wanted to go to a concert,
if I want to go cover Charles Evans, the president and CEO of the Federal Reserve Bank of Chicago, is speaking at 12:30 p.m. Monday at the Huntington Center at a Detroit Economic Club event. Would you be possible to go over and cover this event? I said I'll have to talk to Spencer because that's typically when we do Benzinga Live.
I will only let you go if you do like a man on the street and you ask him like stupid questions.
He's the head of the
Don't
Chicago Fed. I can't do that.
It'd be terribly embarrassing.
Cam Smith, the mullet guy. I don't like Cam Smith, to be honest with you. And I have no reason for not liking him. I just have golfers I like and I don't like. We should check in on Fwonk, though.
All right. I finished Drive to Survive. Finally. It took me like 3 weeks to finish that show because I have to watch it on my own time. Not because.
So I actually wrote an article yesterday about Formula One, which I typically don't cover international racing, but it was brought to my attention that Max Verstappen had a very kind of peculiar contract that he signed with Red Bull in terms of Formula One.
What's his contract?
So the biggest thing was that it has a essentially a not like a trade clause, but he has an opt-out clause.
Okay.
And so basically what these Formula One experts were saying is that that's not common. That's not commonplace in F1 to have these opt-out clauses. But because Verstappen is such a sought-after driver, they basically said if for whatever reason our cars are not up to your standards next year or the year after, you'll be able to leave. So
seeing as how he just won the championship,
they shouldn't have any problem getting a car, right?
Yeah.
But the reason why this could be impactful is because some people are saying, okay, now some maybe smaller driving teams would be able to get big name drivers with the stipulation that, hey, if we're not up to your standards, you'll have a way out. You don't have to sign. You don't have to be locked into this contract. So it does have some serious implications. The fact that this could be changing the norm as far as how contracts work in Formula One.
Okay, I didn't know this.
No, the more you know.
By the way, we have confirmation on the Drive to Survive Season 5 that's happening. Oh, you know what I did not get to do when I was in Vegas?
What's that?
I did not get to look at the Las Vegas Grand Prix circuit, which they dropped the design for last week or 2 weeks ago. It's going to be sick, man.
Oh, that is cool.
It's going to be a Vegas race under the lights. Oh, my gosh. It's going to be so cool.
Are all of the F1 races like racetracks built in the middle of cities?
No.
How many of them are there like that? Like the Macau one is like that, right?
You mean Monaco?
Yeah.
Yeah. I think there's 4.
So, but that's how Vegas is going to be, or they're going to build a track like outside the city?
No, they turn the streets into a circuit.
Right.
Right.
That's what I'm saying. So most of the races aren't like that, though.
No, I think there's 4 street circuits, and the rest of them are.
That's so cool.
Yeah.
I remember playing like racing video games as a kid, where you're like driving through cities and stuff.
It's gonna be.
awesome.
Oh, it's gonna be so freaking cool. Anyway, okay. 10 minutes left in the day. Let's just keep an eye on the market, see what's happening. Do we miss anything? Do we miss any news? Miss any movers? Next week is the start of earnings season. We're gonna get the banks reporting Wednesday and Thursday.
Man, it feels like we were just in earnings season.
What do you mean? You sound disappointed.
So much work.
What? It's so much more fun.
I'm kidding. I'm excited.
Earnings season is like the
and
best.
I get to YOLO options.
Yes, you get to
Woo!
YOLO options. Speaking. So since here, this is what we'll do. Since earnings season kind of starts next week or mostly the week after, let's do this. Let's look at some earnings companies, or companies reporting earnings, and let's look at the historical price action of these companies heading into earnings. So what we usually do here is we'll like bring up earnings like on the show that report like today or tomorrow. We'll look at how they do after the fact. Let's look at how they do before the report. Let's do that right now. So for example, Netflix, okay? Netflix reports earnings, I want to say 2 weeks from today. It's April 19th.
Wait, Netflix does?
April 19th.
Netflix?
Yes.
Already after that terrible earnings report, a couple.
So April 19th, right? So 2 weeks, today's a Thursday. So 2 weeks from last Tuesday.
Dude, if they have another bad report, like how far could this drop?
Okay, hold on.
It's
So April 19th. So let's do this. I'm going to Netflix here. I'm going to this platform that I use, free plug called Market Chameleon. Look at earnings, go to historical patterns. All right. Netflix in the last 3 years. No, there's really no pattern. There's not a great trend in Netflix heading into earnings.
This is interesting. So Netflix, last time the company reported earnings,
it was
of
horrible.
course,
It was terrible.
and they dropped. The stock dropped like 30%.
Yeah.
If they report another not great quarter, like do we see another 30% drop, or does it go down like 10? Like this is what I'm trying to figure out, because if we go down, I'm almost thinking for a trade, it might be worth it to buy some. You said April 19th.
Yep. It's a Tuesday after the close. So
what if I looked at May 20th calls? Oh boy, they're expensive.
really,
Oh boy, yeah.
man, this Netflix is a bit of a sticky wicket here because it was a huge growth story for 5 years, and is obviously it's cool. It's done nothing now. It's done nothing in basically 4 years.
Yeah, it's at its pre-COVID levels, or well below its pre.
I mean, if you bought Netflix 4 years ago, you're flat. You're up a little bit of money, but you're basically flat, right?
Netflix has been the number one stock on my watch list for the past 3 weeks or so. And I've made some money trading it. There's been a few pumps, but I have not like bought in any shares as just a long-term investment yet, because I want confirmation that we're out of this downtrend, or we're not just going to trade sideways for a while. And it hasn't looked like. I mean, we've had a few days, like I think it was a couple of days a few weeks ago, where Netflix was up like 3-4% in a day. But you need more than that, right? I need like a week. I need 2 weekly green candles or something in a row to show me that buyers are coming into Netflix before I get interested.
All right, that's fair. I'm looking at who is reporting earnings in 2 weeks from today. Let's just see if we have anything. I'm sure we do. We got some big names. All right, so any of these names interest me? Yeah. All right, so Snapchat. Okay, Snapchat reports earnings 2 weeks from today, April 21st, after the close.
And
All right.
so last time, remember, Snapchat, Facebook reported earnings first, kind of out of the social media stocks, and that was Facebook's kind of fatal earnings report, the one where they actually showed that they had lost users for the first time ever, and the stock dropped. What was that one? 40% overnight.
That was a doozy.
But Snapchat the next day was down 25%.
Okay.
And then Snapchat reported earnings and they were positive, and then it was up 50% after hours. So it was down 25% during the day, then up 50% after hours. So Snapchat moves off earnings for show.
Okay, we have a trend here. The trend in Snapchat is heading into earnings. The stock trades down more often than not. Let's pull up a chart, okay? This is a daily chart of Snapchat. According to the last 3 years worth of data, heading into earnings, 2 weeks before earnings, again, this is today, right? Because we're 2 weeks before earnings. If you buy Snapchat 2 weeks before earnings, over the last 3 years, the stock is down an average of 2.5%. It is down twice as often as it is up. If you buy the stock today and hold it, or you sell it the day of its report, you're twice as likely to make money. I'm sorry, if you short it, that's what I'm trying to say. If you short the stock today and cover on the day of its report, you're twice as likely to make money than you are to lose money, based on the last 3 years of earnings reports. It does trade down more often than not for the 2 week period prior, for the 1 week period prior, and for the 3 days period prior as well. So there we go. We do have a clear trend. Snapchat is typically weak heading into its earnings reports. That's interesting. Let's go back to the calendar and see what else we have. Let's go let's go to 420.
Okay, why do you want to go to 420, Spencer?
Tesla's on 420.
Holy cow! Wait! Before you do that, can we go to SPY real quick?
Yeah,
What the hell just happened?
do we reverse again?
What the hell just happened?
Oh, we break out. We break out now.
Go to a 5 minute. Go to a 5 mini candle.
All right, I don't typically do that, but for you, I will. Yeah. Wow.
I mean, look at that 5 minute candle. We've got some serious buy-in in the last 5 minutes or so.
Wow. All right. Buying until the 330 reversal.
What 330 reversal?
I don't know. I'm just making that up.
I hope not. I'm holding these calls until at least tomorrow, and I can sell them. But they're up nicely right now.
Good for you. So this is a fun game. Let's remember to do this every day for the next couple of weeks here. If you have a stock, drop us a ticker. Tell us when they report.
Oh, 2 p.m. I could get wrecked by the Fed dude. Spencer, I'm not that convinced that looking at how a stock has performed past into earnings will be indicative of how it will perform this quarter into earnings. Because I think there's just so much. There's so much things that change from quarter to quarter that the environment that Snap was down into its previous earnings reports may be different now. I'm not saying that I'm all about looking at data and looking at trends. I just don't know. Let's test it. We'll use this earnings season as a kind of a parameter.
I agree with you. There are so many variables at play for any given quarter in terms of the overall market. And
oh my God, wait, Hadid's talking about Fubo. I have not heard or talked about Fubo. It's holy cow.
Wait, can I guess? Don't even tell me. Don't even tell me. I want to guess Fubo is $5.
So close.
Oh, it's
a $6 stock. This was like a $60 stock. Like, I'm looking at my history on how I've traded. I sold my last Fubo holdings at $23.24.
Nice job, Aaron.
Thank God I sold out.
Holy cow!
$23. And I remember I sold at like 23, and it went to like 26 the week after, and I was like, "Shoot, why'd I sell?" And now I'm like, "Oh, thank God I sold."
Yeah. Very nice job. All right, so no roadmap today, because, like I said, the guys are in transit. So I believe they wanted to replay their Cool Cats interview. I don't know if that's happening though. So we don't have anything live until 3:30 today when we're doing At the Close with Joel and I. So that'll be a wrap for our show.
Unless
here today.
It's 2:00. I mean, unless anyone has any final thoughts, final questions.
Yeah.
You have about 30 seconds in the chat. And we'll give you a second because you got. Wait, you can totally sell the strike above the calls you bought to lock in profits. Use no day trade. But Aaron, don't listen to me. No, totally. That's a very. The problem is, I think I'd have to buy new SPY calls to put on a spread because I can't sell those strike prices outright because I don't have enough collateral to do so. But maybe because he's saying keep going. Keep going.
All right, Aaron Thomas is telling us. Aaron Thomas, just for awareness, going forward. The universal signal in broadcasting is to stretch. Yes, it is, Rohan. No, this means wrap it up.
All right, Spencer
you guys
Spencer and Rohan can argue about it.
This means stretch. If you guys signal, if you signal to me this, I know what this means. It means keep talking. This is stretch. Okay.
All right, wait, here.
I know
hold on.
I haven't. Rohan, don't fight me on this, okay? I'm right.
Hold on, let's get to the bottom of this. Keep rolling.
Oh, you want me to stretch? Okay.
No, okay, all right, hold on. I just Googled broadcast hand signals. Stand by. All right, you're on. All right, that's easy. Come closer. Oh, stretch it out. Is that elongate the?
That's literally what I was just doing.
Okay. Yeah, stretch it out. There you go. I don't know how accurate this is. I don't know what the source is on this. So we'll do some more digging.
To me, this means wrap it up. Is what this means to me. Like this, the finger in the air, the circle finger. That means wrap it up.
Stretch it out. Yeah, here's another stretch it. Oh, speed it up. Okay, we can start incorporating some of these. Yeah, Patrick Starr, we do need some I don't know.
We need some production.
Oh.
7 hours.
Here we go. Hand signals for basic symptoms: breathing problem, unconscious, choking. This is the universal sign for I'm choking. By the way, grabbing your neck.
Yeah.
Heart attack, holding your.
All right, that was fun. What do you think about LLAP? Okay, I don't know. I don't know if I know that.
AARP.
LLAP.
Do you know you don't actually have to be like 50 to join AARP? Like you and I can sign up for AARP right now and get all the hotel deals and whatnot.
Wait, Hertz Scramblers. Is this real? Wait, is this a real? LLAP. Terran Orbital. What does this company do? Whoa. A lot of insider. Holy moly! A lot of insider activity. A lot of insider activity on Tuesday and Monday and last week.
God damn, I wish I could freaking sell my calls right now.
So it just got uplisted. Is that it? It wasn't an IPO, was it? So it's a satellite play, right? So it's a satellite play. Oh no, it was, this was an IPO, I suppose. So they have. I'm just reading about this company real fast in Benzinga Pro. This is what lighten up. It's not this weekend. I'm going in a month. I'm going to I have a wedding in Rockville. I think it's in Rockville. Somewhere thereabouts. I don't know. I went to the University of Maryland, so it's like going home away from home for me. All right. Satellite play. What someone just say something now? Okay. Satellite play. This is what we were asked. This is what we were asked about. Not a lot of history to go off of. I would have to look into some things like the debt to income ratio. I'm assuming they have revenue. I assume they have revenue. Yeah, look, they have revenue. Okay.
Wait, what did I just?
They have revenue of $40 million, man. Oh boy, this is is this the kind of market you want to be buying a $40 million revenue company in? I don't know.
All right, wait. Can someone who's good at options help me out here? Because I may have just, I don't know. I may have screwed something up. Yeah. I was trying to do. Oh, somebody beats a dog. It's called a kettle.
Yo, that's a good one. I never heard that before.
So wait, okay. I just sold. I sold a call of the SPY 449. I bought the 448s. I'm up on those, but I just sold a 449. So like, what am I on the hook here for? If SPY goes above 440, do I have to buy 100 contracts of SPY? I don't have the money for that.
No, God.
What am I on the hook for? What'd I do? Or does it automatically know because I'm holding these calls that it's a type of spread? Like, is that how it's going to recognize it as some sort of a spread? So I bought 5 of the 448
okay,
calls. I sold a 449 call.
Okay.
That expires tomorrow. So I think I'm in the good as long as SPY doesn't go above 449. But if it does, that's what I'm curious about. Like, what happens to me? Or do I just lose the money? No, you're good. You're in a debit spread. You don't have to buy the shares. Okay, cool. All right. Woo. Because I don't have whatever 100 times 449. Is. What is it? $44,000.
Options, baby. Hashtag leverage. All right. That'll be a wrap for us here today.
Yeah, Aaron Thomas, are we good now?
Yeah.
Yeah, the next stream starts at 2:10. That's the redirect.
Okay, so we're gonna redirect to. This is gonna be a replay, right? We're replaying our interview from last week, not our interview, Benzinga's interview on the roadmap with Cool Cats. Cool Cats is one of the biggest NFT projects around. And by the way, speaking of NFT projects,
Oh, did you finally drop yours?
no.
Oh,
But what I was going to say was, I'm not going to tease the whole thing, but there is a chance that Benzinga will be present at a major NFT conference happening later on this spring.
VCon?
I'm not going to say anything more. I'm just saying there is a chance. That's all I'll say. Speaking of events, though,
Wait,
guys,
my max loss is credit received.
you didn't sell anything, right? Or you did sell? Did you sell something?
I have no clue, to be honest with you.
You don't even know if you bought.
I sold a call.
So
but did I
what-
pay
what-
or did
what-
I get debited? Like I don't know.
What did you receive for selling the 449 or 8? Wait, what'd you do?
I don't know.
care. All right.
I don't even know if I got paid or they paid me. To be honest,
If
with
you
guys.
sold something,
then they paid me.
yes.
So they paid me 142.
Okay.
All right. So you're saying the most I can lose is that much?
If it goes above 449,
The most I can lose is the exact amount that they already paid me. I just have to pay it back. I have no clue.
no, that's not. No.
I'll figure it out. We're figuring it out.
Oh
I'm
my
figuring out how to
gosh.
trade
Oh my
options in real time.
Gosh.
Cool.
All right.
I'm gonna lock in some.
Lock in some losses.
Yeah.
All right.
Just buy it back,
guys. Check out our events. We got 2 events. We got an April event coming up here in 2 weeks. The Cannabis Capital Conference. Click the link in the description to learn more about that. There's also a discount code. Aaron Bree will be there. That'll be followed by our May FinTwit Summit event in Vegas, at which I will be there. A discount code for that, and the link is also in the description. Check it out. It's going to be freaking amazing. They'll both be amazing. Let's be honest, because we do some pretty great events, if I do say so myself. Help us out, guys. Smash the like button. We'd appreciate that. Guys, Benzinga Pro. Subscribe. Pro.benzinga.com. Free 2-week trial for everybody. If you have no idea what Benzinga Pro does, if you don't even know what we're talking about when we say Benzinga Pro, well, now you will.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio today.
Hey, pro.benzinga.com. Free 2-week trial for everybody. Discount code to Benzinga Pro. Or discount link, I should say.
Wait, we're
this
still live?
This link, we are still live. This link that's scrolling on the bottom and in the description will get you 25% off your Benzinga Pro sub. All right, we're done. As we said, no Benzinga Live tomorrow. We'll be back on Monday. So if we don't see you, have a great weekend. Good luck. Make some trades or not. Get outside. Enjoy the weather. And that's that.